focus. Everyone, wants to be close to that center of power in DC and build those relationships. But given the history between these two men, it was very notable. Like, is this a shift in Mark Zuckerberg's personal politics, or is this just him simply trying to play this political game? And I think through the reporting and interviews that we did, I think what we sort of came to see was this picture of a CEO who's less tied to his own specific, political ideals and more a sense of self-preservation, right? He's someone who out to try and make sure that he and his company survive, and that's what this is all about.
Which was so striking in your piece, because what came up for me is that no one seems to like Mark Zuckerberg. Whether you're a Democrat or Republican, everyone seems to ignore him and not like him. So to your point, it's really about the political showmanship.
I think he's an easy person for people to point to, right? We've seen this for years in Congress. Like, when things go poorly, it's easy to point to Facebook. It's easy to point to Mark Zuckerberg. What happens in the world, what happens in society usually happens on their products, on their platform. So they end up sort of, in some ways, they totally deserve a lot of this blame. In some ways they don't, but they get it anyway. And I think Mark Zuckerberg, has been a uniting person in DC in that both sides of the political aisle dislike him historically. And so on the one hand, you can understand, why he would want to try and forge this relationship with President Trump. On the other hand, it's unclear if it's working. And I think that we have sort of, to this point, not seen the returns on those efforts from him. There's a bunch of stuff that Meta is still facing in terms of regulation and politics that are hard for the company. And I'm not sure that he's quite gotten the return that he wanted yet.
He bought a mansion in Washington, D.C., he being Mark Zuckerberg. What's that about?
Yeah, $23 million,
Nice.
As we all do, buy I believe, like a fourth home. I think the idea there is that he's just going to simply be in DC a lot more, especially over these next 4 years. I think it's certainly a signal to not only the administration but others on Capitol Hill that, hey, I'm going to be a regular presence here, and you're going to see me around. I want to be involved. It's a change of posture for him. For the prior 4 years, or at least the prior 2 years, he had really sort of handed the policy and politics part of the business over to Nick Clegg, who was the former deputy prime minister of the UK. But Clegg announced that he's leaving shortly after the election. And I think Mark Zuckerberg has sort of picked up that baton, and he's sort of said, I need to be the person to do this. Donald Trump doesn't want to deal with a number 2 or a number 3 at any company, right? President Trump wants to deal with the CEO. And I think Mark Zuckerberg knows that, which is why he's showing up in DC himself as often as he is.
What you also talk about in the piece is just the contrast between Elon Musk and Mark Zuckerberg, like two entrepreneurs, incredibly brilliant, starting different companies, and just how politically their paths have diverged.
Yeah, we had this section in the story about how it was described just as sort of Elon envy on Mark Zuckerberg's part. So you can kind of imagine he's, for years, kind of getting grilled, as we talked about, by politicians on both sides. He spent a lot of time, at least a few years ago, apologizing, right? Hey, we need to do better. We're going to do better. Kind of like trying to appease everybody to no success. And meanwhile, you look out, if you're Mark Zuckerberg, and you see what Elon Musk is doing, and he's pretty much just doing whatever he wants, consequences be damned. And I think there developed a sense of like, why am I out here apologizing? Why am I out here trying to please everybody and play down the middle and all this stuff when, he's out there, he being Elon, picking a side, donating, hundreds of millions of dollars to the Trump campaign, literally campaigning for the president while running a social network. And there seems to be no repercussions. And so I think over time he developed, like I said, this like Elon envy, this sense that maybe I'm doing it wrong and he's doing it right. And I think we've seen some of that sort of show up in the way we see Mark Zuckerberg the last, 6 to 12 months. He's a lot less, he's an unapologetic guy as far as how he used to be. And I think Elon has a lot to do with that.
Interesting. All right, great story. Bloomberg Business Week story, big take story. Kurt Wagner and Riley Griffin, Duke grad, there with a great story. Check it out. So on the Bloomberg terminal, you can do it on Bloomberg.com/bigtake. Kurt Wagner, tech reporter, Bloomberg News, joining us from Denver, Colorado. So a different tactic, perhaps, from Mark Zuckerberg and Meta as they deal with the administration of President Trump here. Markets still very strong, so we will keep an eye on that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence now.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Happy Tuesday. It's Monday, but it's Tuesday,
yes.
Everybody. Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We have a good hour lined up for you. We're going to tackle these markets for you. Plus, take a look at the Salesforce deal with Informatica. We'll take a look at the price tag on that as well with Anurag Rana, Bloomberg Intelligence technology analyst. Plus, Patrick Wilson is portfolio manager at Center Square Investment Management. We'll talk about the state of commercial real estate. And then we'll tackle what's happening with alternative energy after many different executive orders from President Trump. You got nuclear on the plus side, wind and solar on the negative. We'll break that down with Bloomberg BNEF. So lots to cover here. Let's kick it all off for you on this positive risk on day with John Tucker.
All right, guys, the major stock index is pushing higher. The first trading day since President Trump said Sunday the U.S. is going to delay a 50% tariff on goods coming from the EU. Supermicrocomputer, United Airlines, Warner Brothers Discovery among the leaders in the S&P 500 right now. Consumer discretionary, that is the best performing industry group in the index. And, of course, that's home to Tesla. Those shares up close to 5% in today's trading. Meantime, Robert Socket of Citigroup sees stagflation ahead for the U.S. economy.
I do think once we get into the summer and that data comes in, especially later in the summer, you will start to see more definitively that prices have moved up due to these tariffs and that growth is slowing down, both because that front loading of purchases has to be paid back and the tariffs themselves will slow activity.
Right now, shares of Informatica up 5.6%. They're going to try again. Salesforce agreeing to buy Informatica for about $8 billion. S&P 500 pushing higher, 91 points higher. That's up 1.6%, 58.94 on the index. The Dow Jones Industrial Average up 522 points. The Nasdaq 100, 396 points higher. And that is up 1.9%. The 30-year bond, 6 basis points lower, under 5 at 4.97. You know, Jack Bogle would be spinning in his grave. The average fee for an ETF launched this year, a record 65 basis points. Leverage trades, cryptocurrency, active management among the new offerings in the ETFs. Buyer beware. Anyway, we check the markets all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
We had Emily Grafeo on Bloomberg Surveillance this morning, and that was her story, her reporting. And she's saying basically the vanguards of the world have just hoovered up all the index stuff. So if you want to launch an ETF today, it's got to be something really special, niche, and oh, by the way, you got to make money. So you have to charge higher fees.
Which, how do you do that? That's the thing.
Yeah.
And it's a race to zero at the end of the day.
Yep. So anyway, good stuff. All right, John Tucker, thank you so much. We appreciate that. We got Alex Steele and Paul Sweeney live here with you in the Bloomberg Interactive Broker Studio, streaming live on YouTube. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney with Alex Steele, and we're joined by Bloomberg's Christina Aquino. Christina, what are you looking at?
Well, Paul, looking at AMD this hour, those shares up more than 4%. That's after we got HSBC upgrading the chipmaker to hold from reduce. And of course, the analysts are citing the de-escalation in tariffs. We have had AMD striking some deals with a Saudi Arabian AI company. That's off the back of President Donald Trump's trip to the Middle East, of course. And then earlier this month, it also struck a deal with Sanmina, which will buy AMD's AI server assembly plans, that deal is worth as much as $3 billion. So some good deals for AMD here, boosting the stock today.
Yeah, so there is stuff. Like, we're starting to see like M&A kind of move a little bit. All right, let's go to Apple for a second. So the rough part for Apple last week, of course, was potentially the threat from President Trump having to move all production to the U.S. What now?
Well, Alex, we're seeing a rebound. So investors kind of taking stock of what's next for Apple, right? So shares up just over 1% at the moment. And yeah, they are snapping an 8-day decline of more than 8%. That's the longest losing streak since January 2022. So after all the buzz over President Trump's comments of a potential 25% tariff on Apple, people are asking, how exactly are they going to be doing this, right? Because otherwise, your iPhone is going to cost $3,500, which I'm assuming nobody wants to pay. And so Bloomberg Intelligence does say that one potential way that Apple could navigate around this would be maybe negotiate more domestic spending and win an exemption on lower cost products in return. So, more to come in this story. We don't really have confirmation on where the tariff thinking lies as far as President Donald Trump goes. But these are kind of some of the ways that people are thinking Apple could potentially deal with this.
Generous Motors, GM. What's the story there?
Yeah, we have GM's financing arm out today with a multi-tranche bond deal. That's after they already sold more than $2 billion of notes 3 months ago. And so we're seeing GM seeing its first gain in 4 sessions, just up slightly, 0.4% last I looked. And so, we're looking generally at a more challenging car market, of course, and GM is very much a part of that. Bloomberg Intelligence citing a recent study by CarEdge saying that roughly 65% of potential new car buyers would walk away from the market entirely if payments rose just 5%. So, but they're also saying that GM is one of the companies that's navigating that and showing strong acumen in managing price elasticity and also controlling its costs.
All right. Thanks so much, Christine. Really appreciate it. Lots of fun things going on there. You can check out more conversations just like this. Subscribe to our new Stock Movers podcast. Listen for 5-minute audio reports on the biggest winners and losers within the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, let's head back to Europe, because not only was there news on trade, but there were some pretty dramatic job cuts over at HSBC, Stephen Major being one of them. If you follow the market at all, if you follow rates analysts, he was kind of the guy who had the best, the biggest, the boldest calls. And he was also let go within this move by HSBC to overhaul its global research department. Tomasz Netzel is senior European banks analyst for Bloomberg Intelligence and joins us now. Why? Why did this go down?
Hi, good afternoon. Well, first of all, we have to remind ourselves that HSBC is right now under the restructuring. They announced this a couple of months ago. And what is happening at the moment is the bank is delivering on what they have promised. So they want to reduce the workforce. They want to have a thinner cost base. And sadly, this is part of that is, high firing as well, rather senior people in the company as well, in the organization. This was already as well flagged by the company. It was leaked to news that the senior managers may be targeted as well. So this is just confirming to us that the new CEO is very much on track to deliver on what he wants to deliver. So $1.5 billion of cost savings in the next 18 months.
And I'll point out, 16 years ago, when we began Bloomberg Intelligence, one of the primary reasons is because we foresaw Wall Street walking away from its commitment to equity and credit research, and we wanted to fill that gap. We thought Bloomberg could fill that gap, and here's just another example. 16 years later, when you have costs to cut, they look at the research department here. Tomasz, HSBC, and by the way, Bloomberg Intelligence now has about 500 investment professionals around the world covering basically everything. BI Go on the terminal. Tomasz, HSBC, what's the strategy of this bank? Is it a Euro-central bank? Is it an Asia-focused bank? I don't think they're a U.S.-focused bank. Where are they these days?
Well, definitely they are not anymore very much US-focused bank, and they are getting less and less exposure in Europe, especially in terms of the investment banking operations. It's definitely, if you look at the strategy for the bank, they want to grow in wealth management business. This is where they see potential. They want to grow their new a new commercial and investment banking unit they merged and created this year. This is the opportunity. And Asia is definitely the place where they want to grow, where they see growth opportunities. Asia and Middle East as well. They've got exposure into Europe as well. But also we have to remind ourselves they hired wealth management specialists here in London, so in UK. So that's definitely push towards wealth globally, less of investment banking globally, more in Asia. And definitely, as I mentioned before, Asia is definitely the growth engine, and the recent split of the group for Hong Kong, London, and some other, and UK and other parties showcasing you where the bank is making most of its money, and it's definitely in Hong Kong.
What is the state, before we let you go, of European banks, particularly as they relate to some of the U.S. powerhouses?
In terms of IB, well, if you look at the European banking sector, the banks, they were losing some sort of market share in investment banking revenue cake, and it has happened for the couple of last quarters. Of course, with the current changes in trade tariffs and geopolitics, it can change in the coming quarters. But HSBC has been always smallish in investment banking. They never had very good market share in Europe or US, so I think it was very smart move for them to move away from those businesses and focus to where they can make money. And I think that's what the banks are doing right now. They're looking for the opportunities, markets where they have strength, where they have advantages, and where they can deliver satisfying ROEs.
All right, Tomasz, thank you so much. Appreciate that. Tomasz Netzel, Senior European Banks Analyst at Bloomberg Intelligence. He was over there in our Queen Victoria Street, London headquarters, a spectacular building in the city of London, right near the cap of the Bank of England building, which is also very cool. Let's switch gears to technology. Had a little M&A trade in the marketplace today. Salesforce is said to near a 25 per share deal for Informatica. So we want to break that down with Anurag Rana, Bloomberg Intelligence Senior Technology Analyst. I'm looking at Salesforce. The stock's up about 0.6% here today. This is a deal that's been out there for a while. They've been on again, off again, talks here. What is Informatica and why is Salesforce buying it?
Yeah, when you saw the deal rumor about a year ago, April of last year, the Salesforce did take a beating at that time, and the deal at that time was rumored to be somewhere around $10–11 billion. That didn't go through, so now they are buying it back again at about $8 billion. On Friday, when the news came out, the stock did trade off a little bit, about 4%. But today, as you said, it's not moving as much. Informatica is in the data management business. So if you are a large company, it'll help you manage a lot of the data that you have across multiple databases. So whether it is in System A, System B, System C, the CFO's office can see that data across various systems. Now, that was not core of Salesforce's business. Salesforce has bought a product in a long time ago, a company called MuleSoft. But recently, they issued a new product, or they launched a new product called Data Cloud, which takes into account a lot of their cloud assets that they have. And that product has done very well. And part of the reason why that's done very well is because people are using that data to fine-tune their large language models. So I think that's really what's behind this acquisition, is Salesforce pivoting more towards that data aspect of it.
How does Informatica play in the AI world? Like, does this do anything for Salesforce on that end?
Well, it helps Salesforce go and knock on a lot more enterprise doors and say, well, I know how to manage your data. So I don't care which model you use. You can use any model, but I can help you with your own data and how to include that data in the broader scheme of the large language model. Because remember, currently LLMs are only being trained on publicly available models or publicly available data. But sooner or later, companies will have to feed their own internal data to these models.
So I'm looking at Salesforce's stock. It's down 17% year to date. Why is that? Are they not getting any AI love?
So when you see across most of the software world, barring a handful of companies that are straight away being directly impacted with AI, the rest of the space is still struggling because of the lack of seat count growth. They sell a lot of the legacy products. So when you look at somebody like a Salesforce, they do have AI products, but all in all, that products are not even adding to $1 billion, while their total revenue base is $40 billion. But the rest of the software space is struggling because enterprise spending is tight on the non-AI side of it.
So what other kind of companies or M&A deals in this space might we see? I do feel like we're starting to see movement here in M&A, but it's not sort of broad based. It's a really pick your poison kind of thing. What else is on the docket?
I think there would be a lot more focus on the infrastructure layer, areas which are associated with, connecting databases together, connecting models together. I mean, that's really what we are seeing out there. IBM's doing a very good job about it by picking smaller companies, 4 billion, 5 billion, and really expanding their software package over there. Now, as far as the large companies are concerned, I think they're going to have still a very hard time going through any big acquisitions, which is a great opportunity for companies like Salesforce or Workday or IBM to expand their, you could say, the breadth of what they're selling to the enterprises out there.
What's the latest on just the narrative in the market, Anurag, about AI? Before all this tariff talk started several months ago, that's all the market was focused on. I feel like we don't talk about AI a lot because there's a lot of stuff coming out of Washington that grabs the headlines. What's the thinking on AI in a world where tariffs are going to be higher, trade may be less robust?
So, from a fundamental point of view, not much has changed. AI demand still remains strong. There's still a lot happening there. But what's happening on I would say on the other side of the equation is because of DeepSeek, there's a lot more questions about the infrastructure side of AI, which is, the chips and the data included, that's servers and all those things. But on the inference side, people like Microsoft are showcasing how they are seeing the benefit of it. If more people use AI, their revenue goes up. So there is a little bit of a bifurcation there. I think tomorrow when we see NVIDIA results, we'll have a much better idea in terms of their backlog and then the demand for chips, which we think will still remain strong.
Oh, it's good if I turn on my microphone. It's a Tuesday. I was asking, it was so brilliant of me, my question. Do you feel like NVIDIA is going to be a transformative quarter, or do you think it's going to be steady as she goes and just kind of prove the basics?
I think it's tough to say that because I think the demand is still going to be fine for what they are selling. But always the question is, whether that's good enough for investors out there. We don't know what the investors are baking in, a much more rapid, expansion of their backlog. But, that's, I think, always the case with some of these high growth names is investor perception is really what drives some of the forward, momentum in the stock and the valuation.
All right, Anurag, thank you so much. We appreciate it. Anurag Rana, technology analyst for Bloomberg Intelligence from the burgeoning tech hub of Chicago, Illinois. It is amazing how prior to the Trump tariff discussion, President Trump, earlier this year, all the market was focused on exclusively, it seemed like, was AI. Mm-hmm. Every company had it in their earnings call. Every company management was asked about it, whether they were a technology company or not. And man, that just went to the wayside. And now it's all about tariffs. What's it going to mean for your business? Economic slowdown, inflation.
It is, until you prove that something really awesome is coming from AI and you can actually make money off it. And then the market kind of remembers, just look at what happened with Meta, for example, or Microsoft. Yep. You remember that, oh, right, this is a really positive narrative that not a lot of other companies in the world have access to. And it's one of the reasons why the U.S. exceptionalism trade was so strong for so long. And it's sort of like money being diverted from the large language model training to actually inferencing where you and I can use it. And that's where that moneymaker is. Just look at Google. Remember, going to charge you $250 a month now.
Finally see a little bit of stability in the Bloomberg, in the U.S. dollar. The Bloomberg dollar index is up at 0.5% here today. You don't see moves higher in the dollar over the last several months. So as while risk assets such as stocks have rebounded, the U.S. dollar has not down about 8% from its recent high here. So that is notable and it gets your attention. All right, coming up, we got a lot more to cover here. We're going to have Patrick Wilson, portfolio manager at Center Square. That's coming up in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we are being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. So we had consumer confidence rebounding and the U.S. and the European Union speeding up trade negotiations. And that's kind of setting the tone for this risk-on rally today. NVIDIA, among the most active, it was up close to 3%. This comes ahead of the earnings results. We're going to get that after the close of regular trading tomorrow. Treasuries also getting a boost in price, so that pushes the yield down. The 30-year yield back below 5%. And the U.S. dollar also advancing. Dollar DXY up 0.6%. S&P 500, 90 points higher. That's up 1.6% at 5893. The Dow up 500 points. The NASDAQ 100, 396 points higher. That is up 1.9%. Shares of Temu owner PDD Holdings plunging. The quarterly sales and profit missing estimates. The trade tensions between Beijing and Washington taking a toll on the business there. Trump Media and Technology agreeing to sell around $1.5 billion in their stock and $1 billion in convertible bonds. What are they going to do with it? They're going to buy Bitcoin for their treasury. And right now, those shares down 10.5%. And finally, Claire Stores consulting with several firms on how to shore up its finances. The tariff concerns pressuring their earnings. Claire's, once a beloved mall
my daughter loves Claire's
staple.
She loves Claire's.
Also confronting higher import costs. They depend heavily on China for low-cost sourcing on all their merchants. What do they sell? Is tweens?
Stuff. Yeah, it's
well,
like,
I know they sell
it's
stuff.
like buy one keychain, get 75 free, or like, here's your hair clips, or like your headbands and your fun stuff. They also have some stuffies.
Okay, so it's like a dollar store for kids.
But a little bit more expensive.
Okay.
This is the place where I bribe my child when we're going to go out and I'm making her do something.
I will never go into. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
Thank you so much, JT. Alex Steele, alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. All right, as we have rates still trading around that 5% level for the 30-year, despite the fact that rates have calmed down a touch over the last 2 days, it does bring into question what happens with commercial real estate. Patrick Wilson, portfolio manager of Center Square Investments, joins us next. Okay, what's the REIT market looking like right now?
Yeah, so it's been very interesting, to say the least, to start the year. Obviously, trade policy has affected all asset classes across the economy, but in terms of REITs, we are seeing things like interest rate volatility. Obviously, REITs are a pretty capital-intensive business, so the issuing of debt and equity capital has had to be really precisely timed. I mean, just this year, we've been from a 4.8% yield on the 10-year to bottoming at 3.99. Depending on where you were in and when you were in the queue, it could either scuttle or even postpone some of your debt and equity issuance on that front. So it's been times where we've also seen development starts year to date have also slowed on the REIT side and commercial real estate as a whole. And obviously that relates to the tariffs and the threat of cost overruns and whatnot being a little bit more difficult to forecast. And so it's kind of taking a wait-and-see approach to the market a little bit.
So in the commercial real estate space, how's the deal flow been? It just doesn't seem like I'm reading a lot about deals getting done.
Yeah, it's a great point. There's if you roll back the clock, we actually came into this year at very healthy levels. That was when the agenda on the Trump administration was going to be very pro-growth. People were a little bit more gung-ho and more optimistic about our economic outlook. And then as we roll through early April and what's occurred since, there's definitely been some trepidation coming through. And so we've seen things like property transactions by count, so property transaction count and portfolio acquisitions, larger M&A deals, certainly get postponed or in some cases possibly even pulled back as a result of just not having that same amount of confidence on where the economy is heading.
What areas in the market can kind of weather this storm, right? Like we obviously have the data center build out, but even that has been trimming around the edges, right? And sort of changing the type of investments that's going into AI and data centers as well.
Yeah, so you're speaking more broadly to just areas where you could...
Well, typically, like the bull case for REITs was data centers, right? But then now it does feel like that narrative is not changing, but shifting a little bit and trimming. Like maybe we're going to go more to the inference stage. So you need to build different types of centers in different areas versus the huge behemoth data centers.
Yeah, no, that's definitely fair. You're speaking to the transition from training in data centers, often far-flung where power and land was widely available, to now bringing it more to the inference phase of the data center build-out, which has to be closer to population density. So what we see here is that making its way into Main Street America, where we start seeing, Microsoft Copilot being integrated into your workflows, and that has to have a lower latency. So we're in the crux of kind of that transition. We've seen over the last few quarters more and more discussion around inferencing truly taking place in the data center REITs. So those would be Digital Realty, ticker DLR, Equinix, EQIX. Those would be two platforms that are starting to speak to where they have a greater amount of network dense colocation and facilities where that latency does matter, and you start to see that AI inferencing take place. And so that's kind of a new phenomenon over the last few quarters.
So as Michael McKee walks into the studio, I naturally think of senior housing. Talk to us, Patrick.
Wow. Wow, that was harsh.
That's got to be a long-term bullish story in your space.
Yes, it is. At Center Square, we really do have a very optimistic view and outlook for the senior housing space. So we in the demographics, not just in the U.S., but across the globe, there is the concept of the baby boomer generation moving through a bit of a pig in the python, if you will, as we move through that age cohort. And they're sitting on a profound amount of equity capital in their homes. So the capacity to pay is very, very high. And demographically speaking, and this kind of speaks to that secular demand that we're targeting at Center Square right now to kind of buffer any economic weakness, what we see is the CAGR in the 80-plus population that we've seen over the last really 20 years has been hovering at 1.5%. And starting about next year, that CAGR will increase to 4.5% of that 80-plus population. And we don't see, real estate being a very supply and demand-driven industry, we don't see really any supply on the horizon that will satiate that uptick in demand. So combining the capacity to pay along with the really, really favorable demographic-led demand coming through, we see that to be very, very favorable for senior housing going forward.
All right, really great. Really appreciate it. Come back. We'd love to get a continued update from you. Patrick Wilson joining us on the REIT market and where there is still value. Patrick Wilson, portfolio manager of Center Square Investment. Just for the record, Michael McKee isn't 80. I'm just putting that out there. I got your back, Mike. Michael McKee, Bloomberg International Economics and Policy Correspondent, joins us now. So you were talking to Thomas Barkin earlier today. Did we learn anything?
Nothing in particular, in the sense that they're all saying the same thing, that they're watching the economy, and the economy has yet to really give us a major response in terms of data to the Trump tariffs, because only a few of them are on, and he keeps going back and forth about what he's going to do. All of the Fed people, including Tom Barkin, are saying, and this is what Tom said today, is that they are relying on a lot of conversations with companies. And the companies they're talking to are saying ongoing capital spending projects are ongoing, but anything new is on hold at the moment, as are plans for either hiring or firing, and in many cases for prices, because they just don't know which way they're going to go. So there's a great deal of sort of Trump-induced ennui in the corporate headquarters these days, and so the Fed can't do much about that.
And that's that same argument, i.e. new capital spending frozen, not hiring. That's the exact same policy they have at Duke University that they announced a month or so ago. So it's academia, it's corporate world. There's just a lot of uncertainty out there. That's probably the word we hear the most. Given all that, Do we put any credence into this consumer confidence number that came in better than expected, better than last month? Is it just making up for last month, which was so shockingly negative because of the tariffs?
Well, it is an outlier. It's not just higher, but it's significantly higher than it was. And that kind of thing always is a sort of red flag. I think the way to look at it is to look at what the conference board said in their press release, that about half the responses came in after the president made his announcement that he was delaying the China tariffs for 90 days. And that as those announcements came in, the responses turned a lot more positive.
Okay.
So that may be the impact. We also saw some big increases in a couple of states, and Illinois in particular, huge increases in confidence that are hard to explain. But we also saw in the conference board's numbers that fewer people think jobs are going to be available, and more people think jobs are hard to get. And usually the conference board numbers reflect those jobs numbers pretty much. So in this case, there's something else going on, and it's probably this idea that things were going to be terrible, but maybe the president put it off. Now, a lot's happened since then, obviously.
Right. And worrying about your job is different than worrying about buying a product and being worried about tariffs. Like, they're different things, even if that's in the same zeitgeist. Also, one can make the argument that this is backward looking, right? So what's going to be the forward looking data that will really give us insight on the consumer?
Well, we're going to watch consumer spending. It's backward data, as is durable goods, capital goods orders that we got today for business spending. We don't have contemporaneous numbers for any of those things, but we do have the drop in business spending on capital goods, and we have a forecast not particularly big increase in personal spending, just a 0.2%. That would be down from last month's 0.7. So if that's the case, then it all kind of fits the same narrative that people are holding back both in business and consumers while they wait to see what happens. And the one caution I would give everybody is don't bother to look at Fed funds futures, because they don't mean anything at the moment.
Well, they mean where the market is thinking that moment, but it could change in 2 seconds.
At that moment, yeah. If you're trading on the basis of minute-to-minute changes, if you're trading on the change rather than what it's telling you about it. But right now, nobody has an idea, let alone the Fed, of when they're going to be able to make a decision on anything.
Yeah, well, the stock market feels fine, up 1.6% on the S&P here, the NASDAQ up 2%. So there you go, the stock market's okay. But the dollar, is stubbornly how low the dollar is.
We talked about that this morning on Surveillance, noting the volatility you see when you chart the S&P or even the 10-year yield, something like that. You get lots of up and down.
Yep.
And the dollar just keeps going down.
Yeah,
keeps going down. Michael McKee, thank you so much. International economics and policy correspondent for Bloomberg News, joining us here in our studio. Again, Bloomberg Dollar Index up about 0.4% today, but still down almost 8% from its recent high earlier this year. So stocks have bounced back, but not so much the dollar. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Investors have seized on a couple of things in today's risk-on session. The European Union, the U.S., they've signaled a willingness to work toward a trade deal over the next 6 weeks. Also, consumer confidence, as measured by the Conference Board, unexpectedly jumping today. As a result, we have all 11 major industry groups in the S&P 500. They are higher, and it is consumer discretionary. That's in the lead. And, of course, that's home to shares of Tesla, one of the most actively traded stocks today. NVIDIA is the most active, up close to 3% right now as they get ready to report earnings after the close of regular trading tomorrow. Meantime, Julie Beal at Kane Anderson Rudnick says it's inevitable that tariff turmoil will push prices higher.
So it's a whole lot of energy and noise for nothing, right? For what used to be very smooth, efficient markets. And so my concern is that no matter what, when you create this level of difficulty in logistics, you raise prices, right? It's just the costs have to go up.
Yeah, right now the S&P 500, 94 points higher. That's up 1.6% at 58.97. The Dow Jones Industrial Average up 568 points. That's up 1.4%. The NASDAQ 100, 400 points higher, up 1.9%. The 30-year yield, 8 basis points lower, down to 495. Meantime, Elon Musk says he needs to be super focused on his companies. Musk writing in a post on X on Saturday, he was replying to news of outages on the platform. Users reported problems with X on Friday and Saturday. And he says, as evidenced by the X uptime issues this week, posted that major operational improvements need to be made. A more focused Elon Musk, maybe. We check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. And that's your Bloomberg Business Flash, Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Swinney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. The big, beautiful tax bill passed by the House last Thursday effectively repeals the Inflation Reduction Act's clean energy tax credits for all but a few projects. And Bloomberg News is calling this bill a big and brutal blow to clean energy. Let's get the latest from Derek Flacco, lead U.S. policy analyst for BNEF in Washington, D.C. Derek, you've had a few days to kind of look at this bill, you and your team. How bad is it for clean energy, broadly defined?
Well, it's pretty bad, to be honest. Depending on which market you're looking at, you might see more or less severe restrictions. If you look at home batteries, home electricity credits, home solar, that gets repealed outright at the end of 2025. And if you look at utility scale stuff, there was already some pretty severe restrictions in an earlier version of this bill introduced by the Ways and Means Committee, nearly unworkable restrictions on any kind of Chinese-linked intellectual property or supplies, as well as earlier phase-outs and a variety of other complicated barriers to usage. Now, this final version of the bill that the House has put out has made that even more restrictive, in part by saying that only projects that begin construction within 60 days after the bill's final signature by the president would be able to qualify at all. So that would really restrict it to a handful of things already in the pipeline.
What it did seem to do, though, is give a lot of leeway, well, maybe a lot's too strong a word, but leeway to commercial solar, for example, but not residential solar. How does that make sense?
Well, the amount of leeway is a little bit relative, and I would say, firstly, the political logic is essentially around sort of the culture war element. The idea is if you're putting solar panels on your roof and deducting that from your taxes, you're probably higher income, you're an elite, so to speak, and so there's probably a desire to reduce that element. In terms of the sort of regional power installations, that's really good for Republican districts. A lot of them have relatively cheap land. It's a pretty big source of tax revenue and potentially construction jobs. So there's an attempt to keep those at least nominally alive. But in practice, the restrictions, the regulations on these credits make them unusable for all but a few projects. This is an attempt to balance between about 12 to 20 Republicans who really wanted to keep those credits alive and practical to use, and a faction that really wanted to cut spending by any means necessary and saw the IRA credits as a great place to go for that. So in practice, it looks a little bit less restrictive, but the sheer web of complications and limitations means that a very, very small number of utility scale projects would actually get that.
Derek Tomkin is famous for saying that companies adapt. Corporations adapt, industries adapt, people adapt. Can the clean energy industry, again, broadly defined, can it adapt and deal and grow and then make the investments in this environment?
I think that's going to be a very big challenge. Certainly, there have been opportunities to try and find alternatives to Chinese intellectual property and suppliers from Korea and Japan. There's progress on building factories out in the U.S., but the level of uncertainty surrounding this bill is pretty high. Even if it gets finalized in something like its current form, you might need to wait for up to 2 years to see final regulations on some of these foreign entity restrictions, and that's pretty chilling to investment. Ultimately, we do see our sort of model for if the credits were fully repealed beginning at the end of 2025 still found that about 83% of renewable projects at the utility scale would still get built, at least across solar, wind, and storage. But that was a pre-tariff projection. We still are sort of thinking how those will fit together since the tariff rates are ever changing. But fundamentally, I think there will be a lot of challenges adapting to this. There's certainly markets where there's still regulatory pushes for renewables. They're still the fastest thing to install or the cheapest. But ultimately, the level of adaptation is going to be fairly challenging and fairly limited given some of the severity of these subsidy-based restrictions.
Which is just so striking, too, because this affects sort of the supply part and the demand part. Like, it hits on both angles. I was talking to the former CEO of Sonova, which had had its own problems, including not being able to pay debt, looking at bankruptcy, et cetera, before any of this happened. And I asked him, I was like, can these solar companies stay in business, or are they going to go bankrupt? And he's like, bankrupt. Like, there's no way that they can survive. Is that what we're going to be looking for?
I think we're going to be looking at a few different things. First of all, a lot of sort of Chinese assets or joint investments, like there's one with Invenergy and LONGi Solar in Ohio. You might see changes in ownership there, so maybe a bit of a consolidation. Obviously, there's a reason that First Solar stock went up. It's fairly insulated from some of these restrictions, but at the same time, like you're going to see in a wave of consolidation, that does mean you see some losers and some people falling out of the market, and particularly segments that are tied to more price-sensitive sectors, wind, residential solar. You might see a bigger hit to those areas as well.
Derek, I know you were at the BNEF summit in Munich. What's the view from Europe as to what's happening to the, the green energy initiative in the U.S.?
Everybody was a little bit curious about where that's going to stand, what's going to be permanent. Europe is often thinking, is this maybe our moment to have more investment here because we have a bit more consistent policy through the carbon price, but it's also dealing with its own challenges. There's been a big focus on shifting to defense and energy security rather than the energy transition per se. Sometimes those go together, say by creating local battery storage, reducing reliance on Russian gas. At the same time, you see a lot of both political and economic pressure to continue using gas through a mix perhaps of U.S. liquefied natural gas as well as imported gas from elsewhere. As for investments in the U.S. that a lot of manufacturers have made when the economic incentives of the IRA seem much more stable, they're certainly questioning what will remain. At the end of the day, as I said, you're going to see shifts in ownership, you're going to see consolidation, and depending on the fiscal picture in Europe and the degree that you can fit the energy transition into that energy security framework, you could see a bit of a shift over there.
That's right. That's right. Sort of how we're seeing with nuclear, for example, like if you can make that argument. It's going to be tough. All right, Derek, thanks a lot. We really appreciate it. It really something, obviously, that I'm following really closely and has implications for, like, entire sectors at the end of the day. Derek Flackel, Bloomberg NEF lead U.S. policy analyst, taking a look at that House bill on the blow to clean energy. Now, of course, the question turns to the Senate.
Yep.
Will it be as disastrous? Because a lot of the credits are being taken from in red states or even purple states. So you don't want to hurt your own state too much. But nonetheless, like the writing most definitely on the wall. And then you add EVs into the mix.
Yep. And it was just, solar. I mean, from a cost perspective, some of those alternative sources of energy were starting to get more cost efficient, more cost effective relative to some fossil fuels that you felt like they were just about ready to turn a corner maybe.
So on a just putting shovels in the ground, they're cheaper, but because they're intermittent, if you factor all the pricing in, they may not be, but that's why it's an all of above strategy. If you need some power right now, solar could be your bet. All right, more coming up. We'll talk about Trump versus Harvard. This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, happy Tuesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Check us out, Bloomberg.com, on YouTube, as well as anywhere you get your podcasts, as well as originals. You can get that on Roku and all your smart TVs. All right, one of the great stories over the weekend, I mean great as in you can really sink your teeth into the ongoing drama of this, is President Trump's administration's attack on Harvard. The latest is that the administration's moving to cancel all remaining federal contracts with Harvard University worth an estimated $100 million, the latest in this battle with this university. Janet Lauren is Bloomberg higher education finance reporter and joins us now. What's the end goal, do you think, as Harvard kind of understands this from the Trump administration?
That's a really good question, because it seems like several times a week we're seeing a new financial tool being hammered down on Harvard. The Trump administration has a lot of issues with Harvard, and many of these elite universities, Harvard and Columbia, have been singled out. Harvard is the richest and the oldest university in America, so it has a particular status. But the administration has outlined several things. In addition to them not doing enough about anti-Semitism, you say they're discriminatory in hiring and admissions. And what does that mean? It's related to diversity and DEI, that they're potentially not picking the best candidates and other candidates are being excluded. He has a problem with the ideological bias, as he said, which is very left-leaning at Harvard, and they should promote more viewpoints than just one. And Harvard has said they don't disagree with him on some of these points, but they don't agree with the way Trump is trying to implement this with, huge financial penalties. And people say, well, Harvard's a private university. Why does the U.S. government have a say in this? And the U.S. government gives universities like Harvard, billions of dollars in invest in grants. Grants, it's true, grants and contracts, but the federal government also allows student visas. They allow international students to come to study at universities.
Well, not necessarily now. Politico is just reporting, Paul, that U.S. orders halt student visa interviews. So there is that.
Okay.
So student visas are regulated, through the U.S. government, and Harvard has almost 7,000 international students. If you look at the international community in total, it's more like 10,000 people, which doesn't, the lower number doesn't include people who are here for fellowships or doing research and their families. And international students typically pay the full price. So there's more than 1 million of them in the U.S., and it's really propped up a lot of universities, including Harvard.
What's the legal path that Harvard has taken here?
So Harvard sued immediately, and there was a temporary restraining order. There's a hearing coming up this week. But procedurally, that we'll see what happens. But if you're an international student and you're thinking, well, it's been my dream to come to Harvard. Should I go? I'm going to do a program for 2 years or an undergrad for 4 years, but maybe I'm not going to complete it. It's introducing a huge amount of uncertainty in this calculation for students.
And what's happening on the ground, I can tell from my time at Duke, kids are choosing not to come to the U.S.
Right.
And then study elsewhere. And some of the best and brightest going to other places. And what do those students do after they get the degrees? They tend to stay there.
Right. Right, because why would you run the risk of going there for a year and all of a sudden being asked to leave? Why not go Oxford is just nice. Go ahead.
Yep.
Why not?
Exactly.
Okay, so what happens? Like what, Harvard's going through the courts, but that's going to take forever.
Right. No, you think about COVID, when there was a huge amount of uncertainty, people had the option of taking a gap year, and the colleges were very accommodating in that. There's less, at some point the pandemic was going to end and real life would return on campus. But it could have a large impact for universities and their bottom lines if they decide to go elsewhere.
So again, I'm guessing every other university in the country is just kind of keeping their head down, hoping they don't get into the sights
right.
of President Trump. Is there a sense that this is going to have a real chilling effect on just higher education in general, in terms of investment, in terms of recruiting the best and brightest students and faculty and all that kind of?
Well, there are a couple things going on within higher education. As Paul, the cost of it is something that I don't think any American is going to disagree with. It's very high. Yeah. There's a whole system of discounting, but if you look at some of the richest colleges, more than half actually pay the full price. Why is a year at, say, Harvard Law School $120,000? Why do students take 6 years to graduate from college? There's a lot of issues within higher education that should be addressed. And I think the American public would like to see some of those things answered. But the system is, there's a lot of federal money in this system.
Yep.
So in some ways, the federal government certainly has a right to ask a lot of questions.
Yeah.
Right. Yeah.
Interesting. It's a tough times for higher education.
Oh my gosh,
these
yeah.
days. And they already had some of the fact that there are fewer candidates, fewer,
Because of pure demographics.
Yeah.
Fewer demographics, yep.
And yeah, there was one area where you didn't think would be affected by elections, like you might have thought, education. But anyway, all right, Janet, thanks a lot. Janet Lauren, Bloomberg Higher Education Finance Reporter on the latest President Trump versus Harvard University, very much and sort of as we walk through that issue between the two of them. All right, for our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on Sirius XM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by ShipStation. Stay with us. Your top stories and global business headlines are coming up right now as we're looking at stocks continuing to jump higher on that consumer confidence data. This is Bloomberg. Happy Tuesday, everybody.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The CDC has just stopped recommending routine COVID-19 vaccinations for pregnant women and healthy children. Health Secretary Kennedy broke the news in a video on his X account.
The COVID vaccine for healthy children and healthy pregnant women has been removed from the CDC recommended immunization schedule.
Pregnant women and children with underlying conditions are considered at higher risk for severe illness from COVID. There's a new step by the Trump administration to end financial links with Harvard University. CBS's Stacey Lynn.
CBS News has obtained a copy of a letter from an administration official that's going out to all agencies, directing them to review outstanding contracts and terminate those they determine are not critical or in line with administration policies. There are 9 agencies who have about 30 outstanding contracts with Harvard, totaling around $100 million.
And there's news about the administration's bid to end federal funding for National Public Radio.
The lawsuit by NPR, Colorado Public Radio, Aspen Public Radio, and Colorado-based KUTE Inc. argues that the executive order to cut their federal funding is illegal and violates the First Amendment. The suit says the order is textbook retaliation and viewpoint-based discrimination. The president's executive order says the Corporation for Public Broadcasting and other federal agencies must cease federal funding for NPR and PBS. Allison Keyes, CBS News, Washington.
Overseas, new information in Liverpool, England, after a van that rammed soccer fans yesterday.
Police in Liverpool say the driver had penetrated the parade route after a police roadblock was temporarily lifted to allow an ambulance through. And that led to this.
Oh, my God!
Police were quick to rule out terrorism and now say this.
We have arrested a 53-year-old man from West Derby on suspicion of attempted murder, dangerous driving offences, and driving whilst unfit through drugs.
He's in custody. 11 of the 50 people injured yesterday remain hospitalized. Vicki Barker, CBS News, London.
A private report indicates consumer confidence rebounded this month after 5 straight months of declines. CBS's Kelly O'Grady.
We were expecting a number around 86. We got 98. What that basically means is anything above 100 is positive. Okay. So we're still negative, but it's much better than people felt.
President Trump's social media company says today it plans to raise about $2.5 billion with an eye to creating a Bitcoin treasury. Checking Wall Street, right now the Dow Jones Industrial Average is up more than 600 points. The S&P is up 100. This is CBS News. Fans had their say last night at the American Music Awards on CBS.
The American Music Award goes to Billie Eilish.
Eilish cleaned up, winning all 7 prizes she was nominated for. She's touring in Europe and accepted via video.
Artist of the Year. This is so crazy.
Beyonce finally won for Best Country Album. Rod Stewart got the audience moving as he picked up the Lifetime Achievement Award. Most talked about moment. Host Jennifer Lopez locking lips with two of her backup dancers, a man and a woman. Deborah Rodriguez, CBS News.
Video showed France's First Lady pushing her husband away with both hands on his face just before they got off their presidential plane to start a tour of Southeast Asia. President Macron said they were just joking around. One French paper headlined it, "Slap or Squabble." I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Wall Street still following the whims of the president. Welcome to the Tuesday feels like a Monday edition of Balance of Power as stocks rally on President Trump's decision to delay 50% tariffs on the EU just a trading day after he threatened them. We're going to be joined ahead with the latest on this by Bloomberg White House editor Jordan Fabian. President Trump, meantime, speaking to graduates at West Point over the weekend in what became a campaign-style rally speech. We're going to be joined ahead by pollster Frank Luntz, who was there for the proceedings and will join us with the rhetoric coming out of this White House with analysis today from our political panel. Bloomberg Politics contributor, Republican strategist Rick Davis, joined by Democratic strategist Jim Kessler at Third Way. And away they go on a Tuesday. Let's start with those markets we just mentioned. Charlie Pellet has the latest on Wall Street in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Away they go indeed. Best level of the day right now on the Dow Industrials, up 641 points. That is a gain of 1.5%.
Is that ours?
We've got the S&P 500 index up 103, up now by about 1.8%. NASDAQ is now surging 408 points, up 2.2%. And the Bloomberg Mag 7 index is surging 2.7%. All 7 members higher today. Your 10-year at 4.43%, with the 2-year 3.97%. Gold down $50 the ounce, $32.93. Drop there of 1.5%. And West Texas Intermediate crude down 1.4%, $60.62 a barrel. And Bitcoin just above $110,000, up 0.5%. Bottom line here, stocks kicking off the week with big gains on renewed optimism about the economic trajectory after consumer confidence rebounded and the U.S. and the EU sped up trade negotiations. Federal Reserve Bank of Richmond President Tom Barkin says elevated uncertainty has led to businesses to freeze hiring and hold off on future investment decisions. He was interviewed this morning on Bloomberg Radio.
Nothing's really changed in the economic environment. You just have policy uncertainty. And I think people are just going to wait policy uncertainty out. They do think there's a light at the end of the tunnel, that there will be some certainty, whether it's the tax bill or some of the trade terms. But I think they're just waiting it out.
Federal Reserve Bank of Richmond President Tom Barkin interviewed on Bloomberg Radio. Headline right now on the Bloomberg Professional Service: New York has won a bid to stop the U.S. from withholding funds over congestion. That story breaking right now. A topic we'll have more for you coming up on Balance of Power later today. But again, the headline right now: New York has won a bid to stop the U.S. from withholding funds over congestion. Salesforce is acquiring Informatica for about $8 billion. Salesforce shares up 1.1%. Informatica up 5.8%. And U.S. Steel shares higher after CNBC reported that the Nippon deal is probably going to close, quote, very soon. Recapping stocks higher, S&P up 103, up 1.8%. Balance of Power continues. Back we go for the Tuesday edition. Once again, your host, here he is, Joe Matthew.
I had to check, Charlie. It does kind of feel like Monday. Great to see Charlie Pellet every day here on Balance of Power. We'll get back to Charlie with the Tuesday trade a bit later on this hour with, the big breaker on the terminal. Didn't think we'd be talking about congestion pricing today. And technically, well, I guess we're not, but the funding surrounding it as New York wins the temporary freeze on potential moves by the administration, which we say so often here, to withhold federal approvals or funds when it comes to state transportation projects and so forth. Apparently, there will not be a punitive measure here for the state of New York. We'll let you know as we learn more. Coming off quite a weekend, a long weekend, I hope for you, Memorial Day. I hope it was meaningful for you, with the president out and about. No public events today, nothing on the schedule. It was, I guess, an exhausting weekend. And well, the headlines were kind of exhausting here. as we walk through yet another threat of tariffs, and this is where we left off on Friday. It's going to take me the next 2 hours to unpack what happened over the 3-day weekend. Remember the EU, 50% tariffs? Thank you for your attention to this matter. Just a day later, on Saturday, the president walked them back, bringing us back to this whole idea of putting on a really tight pair of shoes so we can enjoy how good it feels when we take them off. Jordan Fabian not only covers the White House for a living, going back to the first Trump administration and beyond, but is also the editor of our White House coverage here in Washington, which is a pretty tough job right about now. Jordan, it's good to see you. Thank you. Am I right here? The real headline, the news is there's no news. The president has no public events. This is kind of like a Donald Trump we haven't seen yet.
Yeah, it's a little odd. Almost smacks of Joe Biden. And after, a weekend, as you laid out, sort of setting up the EU as a sudden tariff threat and then reversing that, issuing some threats on Vladimir Putin. I think a lot of people are looking for clarity. Might not hear from the president himself today.
We could do a whole conversation here just based on the Truth Social posts over the weekend, but let's start with the EU. He did update that earlier today, Jordan, to suggest that dates are being, in fact, scheduled, that we're going to have negotiating around this threat of 50% tariffs. What do we know about it, and did the EU have any sense that this was happening?
There was a few calls that happened last week. Their chief trade negotiator was on the phone with the Commerce Secretary and the trade advisor, and then the president himself got on the phone with the head of the European Commission. And my understanding is that they were promising to, quote, fast-track negotiations. The president was upset that the Europeans appeared to be slow-walking things, and so now he's encouraged. But again, we'll see how long this lasts, because he really doesn't like the EU, and he's made that abundantly clear over the course of his 2 terms. And so how long is patience?
So we have till July 9th, right?
Right, and that was, it's important to remember, this is the original date for those so-called reciprocal tariffs.
Correct.
And so we're now back to square one, essentially, although with the threat of higher tariffs, the initial threat was 20%. Now it's 50%.
Yes,
and so that's a significant difference.
Yeah, I almost went wine shopping before I heard of the delay here. It's something we need to keep our eyes on as we spend time with Jordan Fabian, looking at the market reaction today, remembering where we were on Friday with just the threat of tariffs. You've got the S&P 500 up 100 points, almost 2%. The NASDAQ is up over 400 points, more than 2%. Bitcoin is rallying with their eyes, of course, on the White House. And a remarkable recovery here, Jordan, based on where we were. But this is getting to be a pattern. The president issues a threat, markets tumble. He lifts the threat, markets rally. Somebody's making a lot of money on volatility here, right?
Absolutely. It would be interesting to get a look inside even the numbers for key administration figures. We don't have a lot of visibility on that. The disclosure is sort of limited. For people like Howard Lutnick or Scott Bessent or people who are at the center of this and who know. Because the moves are wild, not only in equities, but in treasuries and commodities. And we've not really been in a situation like this where the president himself seems to be dictating market moves to such a high degree. And so that really creates a situation where a lot of people who might be in the know could have the potential to make a lot of money off of this, maybe in an untoward way. It's hard to know. But again, it certainly raises some eyebrows.
Well, that's for sure. Something about animal spirits here. Between the EU trade talks, the speeches at West Point and Arlington, the president was also truthing, if you will, about the war in Ukraine and going after Vladimir Putin, who seems to have lost some favor in the eyes of the president. He keeps bombing civilians in Ukraine instead of acknowledging attempts at a ceasefire. Donald Trump's now calling him crazy. Where are we in this?
Look, I think all things being equal, the president would like to have a friendly kumbaya relationship.
He even said so.
Of course, with Vladimir Putin. We know this about him. This is running up against the fact that he promised during his campaign that he could end this conflict on day one between Russia and Ukraine. And that has proven to be far more difficult. In fact, it comes across as he completely underestimated the decades, if not centuries, of baggage at play here between those two countries. And so we're at a spot where the conflict is still going on. He would like to be done with it and moving on to other things, and so he's become frustrated. And now he took out that frustration for a long time on Vladimir Zelensky, but now he's turning his sights on Vladimir Putin. So will we see new sanctions? Will we see him actually lift a finger to put more pressure on Vladimir Putin? I think that remains to be seen, but he's certainly not happy about the situation.
That's the threat, right, is new sanctions. And just 30 minutes ago, back on Truth Social, I'm sure not happy with the coverage that Vladimir Putin is ignoring him. He writes, what Putin doesn't realize is that if it were not for me, he says, lots of really bad things would have already happened to Russia. And I mean really bad, in all caps. He's playing with fire, exclamation point. Do we know what he's referring to?
It's not clear. He didn't specify. I mean, the talk has been he will do more sanctions on Russia. Whether that actually increases leverage remains to be seen. Russia's already sanctioned up the hill. Vladimir Putin doesn't seem to be affected by that at all. He seems to be in this for the long haul. And from Vladimir Putin's perspective, Trump has shown his hand. When he was in the Middle East a couple of weeks ago, he really angled for that meeting between Vladimir Putin, Zelensky, and himself in Turkey did not come to fruition, even though he really tried to speak it into existence.
Yes, right.
And Putin can sit there and say, this guy is desperate. Why do I need to rush to make any concessions when he is showing his hand on social media and in front of the television cameras every day?
Well, that's pretty dangerous, potentially, when you think about it. And you also wonder if it actually hastens a possible deal with the EU. If the president's not getting along with Vladimir Putin, and we are, in fact, going to start talking meaningfully about peace in Ukraine, does that increase odds of a trade deal with our European partners, especially ahead of the NATO meeting when we could have increased spending on defense?
I'm sure the European countries will be putting it to him in that way. Is that we all need to come together at this time when our adversaries are essentially telling us to giving us the proverbial middle finger, if you will.
Right.
Whether Trump sees it that way remains to be seen. I don't think he's really connected the two issues. And as I was saying before, he has this long-standing animosity with the EU. And so if they are able to come to a deal, I would imagine it's going to be under pretty limited circumstances because in his view, the EU is created to rip off the United States and sort of agreeing to a bunch of concessions on that front would sort of run counter to everything he said over the past weeks, months, and years.
He doesn't feel too differently about NATO. In our remaining moment here, do we suspect that Volodymyr Zelensky will be at the NATO summit late next month?
I would imagine leaders like Emmanuel Macron will try to get him there, and it wouldn't be surprising if he is. He's attended a lot of these, and it would be an opportunity for him to get back in front of Donald Trump and try to make the case for renewed support.
Boy, all of that in 3 days' time. We'll see if the president emerges today, but not expected to at the moment. If he does, it'll be Jordan's team covering it. Jordan Fabian, Bloomberg White House editor, with us live in the nation's capital to get things rolling here in a shortened week, at least for Wall Street trading, and we'll update the markets coming up here with Charlie Pellet. Great conversation ahead with Frank Luntz. He was at West Point for President Trump's commencement address over the weekend, and we're going to be talking rhetoric with our famed pollster coming up next on the fastest show in politics. This is Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing just about the best level of the day right now. On the S&P 500 index are up 103. That is a gain of 1.8%. The Dow up 628 points, up 1.5%. NASDAQ up 412, up by 2.2%. Our Mag 7 index up 2.8%. 10-year at 4.43%, with the 2-year currently yielding 3.97%. Spot gold down $47 the ounce, down 1.4%, $32.96. West Texas Intermediate crude down 1.3%, $60.75 a barrel. And Bitcoin just above 110,000, now up 0.6%. Trump Media and Technology Group, the company behind Truth Social, has agreed to sell around $1.5 billion in stock and $1 billion in convertible bonds to buy Bitcoin for its treasury. Shares of DJT right now down 8.2%. Trump Media, the latest company connected to President Trump to invest in crypto. PSQ Holdings, which his son Donald Trump Jr. sits on the board of, also announced plans today to explore a digital asset treasury strategy. Shares of PSQ Holdings, they're up by 30.9%. Again, recapping, stocks higher, S&P above 5,900, 5,906, up 1.8%. Balance of Power continues right now, and back we go to Washington once again. Your host, here he is, Joe Matthew.
All right, Charlie, many thanks to Charlie Pellet, live in New York. Watching Wall Street rise into the shortened trading week here, it has everything to do with the lifting of the threat of sanctions, or should I say tariffs? I should say tariffs against the EU. Sanctions threatened against Russia. Both happened over the weekend. Wall Street loves the fact that we're taking off the shoe that's too tight. And boy, we've done this a couple of times. I hope you had a long weekend, by the way. I know a lot of people who are out there cooking hamburgers and hot dogs and doing the thing that you do. Is I kept hearing on the local news over the course of the weekend, the unofficial start to summer, right? The start to the U.S. driving season. Let's check gas prices. That's what we do this time of year. Even though, of course, Memorial Day is dedicated to remembering and honoring the men and women who died for this country, serving in the military. That's why we saw some moving observances over the weekend. Saw more than 1,000 graduate at West Point on Saturday. We saw the annual presidential visit to Arlington yesterday, not only the laying of the wreath, but also the speech inside the amphitheater. Both of these events for Donald Trump brought up a lot of talk about political norms, taste, purpose. As the president donned a baseball cap, a MAGA cap, at the West Point graduation, spoke for about an hour, attacking drag shows and critical race theory, talking about the golden age that was beginning in the military because of him. The president even went so far as to talk about trophy wives, referring to a real estate developer who he thought somehow did it wrong. Listen.
And he sold his company, and he had nothing to do. He ended up getting a divorce, found a new wife. Could you say a trophy wife? I guess we can say a trophy wife. It didn't work out too well, but that doesn't work out too well. I must tell you, a lot of trophy wives doesn't work out.
I guess suggesting that some do. When I heard that Frank Luntz was there, and of course he was there, Frank is giving an enormous amount of his time to West Point right now. He's talked to us about the work that he's doing with the cadets as an instructor. He's also learning a lot, which is why we love to talk to Frank about it. He was there for the commencement address. Politics and communications consultant, famed pollster, as we like to say, and in fact, the CEO of FIL. Frank Luntz is with us live right now, and it's great to have you, Frank, back on Bloomberg. I want to be careful with the questions I ask. Did this seem like a typical graduation speech at West Point?
It did not from the very beginning. And President Trump did something that no other president has done. First off, they only come every 4 years. So you got the Secretary of Defense, you have the head of the Joint Chiefs. There are people who come, the Secretary of, I believe, Secretary of State also shows up. So the president only comes once every 4 years. And President Trump wanted to do this. And of course, West Point will welcome the president if the president wants to come. but he did something no president had ever done, which is he recognized cadets from the podium for their exceptional and extraordinary leadership, for their truly almost unimaginable capability to get things done, both intellectually, militarily, and physically. And what I enjoyed most is that he invited them to come up to the podium and say a few words as the ultimate recognition of what they'd achieved and what they were about to do. And that's never been done before. And the cadets absolutely loved it because it said that they matter. West Point as an academy produces the finest young men and women in the country. They do it through training, they do it through character, they do it through an educational background that is so broad and so comprehensive. And to recognize those cadets personally for their achievements was really special, and the cadets loved it.
He did it, of course, in his own way. You heard the remark about trophy wives, drag shows, talking about the former president wearing a hat. None of that was included in your analysis as someone who was there, Frank, and that's why we wanted to bring you on, to have a sense of not only how it went over for people who were there, the cadets and their families, but also to get a sense of how political this actually was and how positive or optimistic it may or may not have felt while we were there. Are we paying attention to all the wrong things?
Well, remember that cadets cannot discuss, they can discuss, but they cannot exhibit partisan behavior, and they don't. And what's amazing about these young men and women is that unlike Harvard, and I get yelled at for doing this, but I'm doing it anyway, unlike the other universities who stage protests, unlike the attempts of other students to disrupt and prevent the exchange of ideas, at West Point, there is an attitude of respect, a commitment to decency and civility, and in the end, they want to hear every opinion of every individual, and they do not wish to engage in partisan politics. So that what the president says, they saw as entertaining, they saw as being enlightening, but they don't come to a conclusion because they're there to learn. They're not performers. They're not about showing their politics and their partisanship. They're there to represent the academy, and most importantly, to defend the Constitution. And that's the thing I wish that your listeners really understood. A cadet doesn't take an oath to the president, doesn't take an oath to the country even. They take an oath to uphold the Constitution, and that's what makes this so special. And that's why I was so happy that it was the president, not just the Secretary of Defense, or not just the chairman of the Joint Chiefs, that the president wanted to be there to say thank you to the cadets from a grateful nation. And to me, that's what we should be focused on.
And we are, as we spend time with Frank Luntz, live on Bloomberg, knowing the honorable intentions of these cadets. Did the president comport himself appropriately?
There's some stuff that he said that was ad lib. There's some stuff that was about things that were not directly involving the cadets and involving the decisions that will need to be made over the weeks, months, and years to follow. But the president made a commitment to the military that was uncompromising, and made a commitment to the cadets that they would have the best equipment, that they would have the best innovation, that they would be represented well. And I take the president at his word, just as I was there for Joe Biden's convention speech last year, which was quite different. And I appreciate how the participants carry themselves and how they have made a commitment to serve whoever is the president in whatever way they're asked to serve, as long as it upholds the Constitution. Look, consider this. Every institution in America, education, politics, law, the courts, Congress, healthcare, every institution is at all-time lows in terms of trust and credibility, but not the military. because the military doesn't take sides. The military doesn't approve or disapprove of someone because of what partisanship they come from, what initial they have after the name, whether R or D. And West Point is the tip of the spear for those institutions. And so they don't have this conversation about whether something was great or horrible. They simply have a conversation about what they need to know to serve, and serve with exceptionalism, serve in an extraordinary way, because excellence isn't good enough for them. These are not the top 10% America. This is the top 1% of America, and they deliver it every single day.
Did you get to talk to the president at all while he was there, Frank?
I did last year with Biden. This president did not, because he wanted to spend more time with the cadets. He did not have the same kind of interaction with some of the faculty. And I appreciate that, because in the end, yes, I'd like to shake his hand, and I'm a collector of challenge coins, so I'd love to get his challenge coin. But in the end, I'd rather have him spend more time with the cadets and less time with us. And his speech, which was 57 minutes long, was longer than past speeches because he had more to say.
Fast forward to Arlington on Memorial Day. And we could talk about the speech if you want. And by the way, people were laughing and applauding in the amphitheater. But he preceded the occasion with a post on Truth Social, and he's been known to do these on holidays, Frank. Happy Memorial Day to all, it said, including the scum that spent the last 4 years trying to destroy our country. Talking about taking in mentally insane migrants, warped radical Democrats, U.S.-hating judges. How do you reconcile that with the spirit and meaning of Memorial Day?
I accept that point, and I accept and embrace that point. To me, Memorial Day let me try this again. Memorial Day is not the beginning of summer. It's not a drive component of driving. It is a honorable and solemn occasion where we recognize and show our respect for those who gave the ultimate sacrifice. And it's a day that I'm more intimidated by than any other. Because let's be candid, I may wear a polo shirt from West Point, I may teach here, but I did not serve. And I appreciate with the very inside me those people who do. And I recognize and respect those families who have loved ones who are buried there. I wish our language was more appropriate to the occasion. I wish that we stop talking about grilling hot dogs and hamburgers and start talking about how great our military is. And I wish that we use language that not only upholds the tradition of Memorial Day, but raises it to the level of the holiday that it truly is, to pay our deepest respects and our gratitude for those who served this country so well, not just for decades,
That's Frank Luntz,
but now for centuries.
FIL, live on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. New York has won a temporary freeze on potential Trump administration moves to withhold federal approvals or funds for the state's transportation projects as President Trump tries to end Manhattan's congestion pricing program. Wall Street kicking off the week with big gains. Right now we are at the best level of the day on the S&P, up 114. That is a gain of 2%. The Dow up 693, up 1.7%. A lot of green with NASDAQ up 448, up 2.4%. The Bloomberg Mag 7 Index outperforming by far, up now by 3.1%. The 10-year, 4.43%. The 2-year, 3.97%. Gold now down 1.4%, down $46 the ounce to $32.97. And West Texas Intermediate crude down 1.2%, $60.79 for a barrel of WTI. A major U.S. economic indicator is flashing a warning. And with that story, here's Bloomberg's Vinny Del Giudice.
Factory orders for business equipment, a key gauge of U.S. corporate investment, dropped for the second time in 3 months. Bloomberg Economics says businesses have no desire to commit to long-term expansion given elevated uncertainty and volatility around U.S. trade policy. The data also show factory orders for autos, electrical equipment, and appliances all dropped, as did demand for communications gear and primary metals. The report covers April. Vinny Del Giudice, Bloomberg Radio.
HSBC Holdings has dismissed more than 24 analysts as Europe's biggest lender embarks on one of the largest restructurings of a Wall Street research department in recent years. Sources tell Bloomberg most of the cuts were in Europe, but they include Stephen Major, HSBC's Dubai-based global head of fixed income research. HSBC, the ADR is down 0.2%. Recapping, stocks are surging. S&P at the best level of the day, up now by just about 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, Joe Matthew.
Charlie Pellet, live in New York. Many thanks, Charlie. As always, we'll get back to Charlie around the top of the hour for the latest on the Tuesday trade. I say that deliberately as I'm feeling like it's Monday here. It is Tuesday. I hope a short week for you. Thanks for joining us on the Little Monday edition of Balance of Power here on Bloomberg Radio, satellite radio channel 121. Yes, on YouTube as well. Search Bloomberg Business News Live to catch our live stream. And now you can watch us on Bloomberg Originals. Boy, you add the podcast, and it's pretty hard to hide from this program. As we look at politics here in Washington and abroad after Memorial Day, and a lot of news on Harvard that I want to get to the panel with here. President Trump moving to cancel all remaining federal contracts, wants to take money destined for Harvard, give it to trade schools, and now the administration is weighing, according to Politico at least, requiring all foreign students applying to study in the U.S. to undergo social media vetting. There's a lot to get into here with our panel. Rick Davis joins, Republican strategist, Bloomberg Politics contributor, of course, partner at Stonecourt Capital, alongside Democratic strategist Jim Kessler, Executive Vice President Policy, Third Way here in Washington. It's great to see you both, gentlemen. Welcome back. There was a time when both Rick Davis and Jim Kessler were on opposite sides of the aisle in the United States Senate, and it's always an honor for us to put them together here. Rick, I want to ask you about Harvard because the onslaught continues, but much like the threatened tariffs, with some exceptions, it has been largely threats that the president is lobbying at Harvard, or reports of threats in the case of this Politico story on foreign students being blocked by attending Harvard. How much of this is real? I mean, the idea of taking money and giving it to trade schools, is that something the White House has actually written a plan for, or the president musing on Truth Social?
I think that you cannot underestimate the social media musings of Donald Trump with policy development in the White House. I mean, we've seen time and time again a post out of nowhere, no seemingly policy initiatives directed toward an issue, and yet when Donald Trump posts something on Truth Social, it has the strength of a policy determination, maybe slightly weaker than an executive order written from his desk, but there's no question there's a war on between the administration and Harvard. There were $1 billion worth of grants canceled by the administration, and Harvard is suing to get that money and more back. So the courts will ultimately be the arbiter of that. But this latest effort obviously shows that they've been doing some work inside the administration, because there are a lot of things that Harvard does for the government almost as a business, training cabinet, sub-cabinet members on various aspects of crisis management and things like that. And what the administration has done now is said, in addition to these grants, I'm going to cancel the business relationship between Harvard and the administration, which goes back to the Kennedy administration. I'd say the long time in coming. And so you see the upping of the ante. And of course, you mentioned, you know, kicking all these foreign students off of the Harvard rolls. They can go somewhere else if they want, but they can't go to Harvard. So it is a serious effort by this administration to undermine Harvard, its finances, its admission policy, its ideology. And I see no reason why they would demur in this, because to them, this is a symbolic conflict. It's not so much about Harvard, but what Harvard represents, and this is what they're opposed to.
Therefore, it doesn't always matter the way it turns out. Jim Kessler, the president, writing as well, I'm considering taking $3 billion of grant money away from very anti-Semitic Harvard and giving it to trade schools all across the land. What a great investment that would be for the USA, and so badly needed. When you step back and consider all of the threats and actions the administration is taking, and Rick did a pretty nice job there walking through them here, Jim, does it matter if he closes the deals on any of these, or it's just about getting caught in the act of hating on Harvard?
I think it's more about getting caught in the act. I think this is performance art by Donald Trump. I expect at least 90% of what he's trying to do to be struck down by the courts. It's unconstitutional. That doesn't mean that it won't take some time for Harvard to get through this and do some damage, but I think Trump gets to make a headline, then he gets to complain about the courts, and then he gets to blame the Jews, because he's also saying, look, I'm doing this because of anti-Semitism. I know of no Jewish organization in America that is looking to attack elite universities or Harvard University in particular. It's actually something that makes Jewish people very, very uncomfortable that he's doing this and saying that this is in the name of Jewish Americans. So I think it's performance art.
Well, I guess part of that performance would be defunding NPR and PBS. This is now going to court. This brought us back to the 1st of May. And NPR is now suing. Rick, I'm sure you've seen this. National Public Radio suing over the executive order that would cut federal funding. Lawyers are going to make a lot of money no matter who wins any of these cases here. But this is something that Donald Trump, I feel like they're coming out of the same file here. It's good politics to seek to defund NPR, whether it happens or not. Do you agree?
Yeah, I think this really does fall into that performance art category. We know that Donald Trump prizes that. Most of his best friends in Congress are the biggest performing artists of all time. If they could give a congressional Emmy award, a number of them would win it. But the bottom line is it's a disruption tactic, too. His base wants him to be disruptive, take apart the mantles of the deep state. And the megaphone of the deep state is NPR and PBS. And so whether he's successful or not, he will get credit from a very large portion of his base political support comes from people who are going to applaud this. And then, as I totally agree with Jim, the outcome is really irrelevant because he's already banked the effort for trying. And in this case, results don't matter. The effort is what really is going to pay off for him politically.
Well, I'll tell you what, there's nothing like Pledge Week at an NPR station. Jim Kessler, isn't public radio just going to make a boatload of money on this? This is the biggest advertising campaign for NPR they could buy.
Well, you get into Trump's crosshairs, and it's a great fundraising opportunity for NPR and for members of Congress. Look, I think it's a twin-edged sword. These organizations aren't used to this type of fight. They're often used to a fight about, going against Congress there. That's Congress is the one that has often been hostile to NPR. Democrats have generally saved NPR. But I also think some of the things that Trump is doing is going beyond the performance art, and that's looking at social media posts of people. And I'm just thinking, like, I would not be able to pass a Trump test on social media, not to get into the administration. Of course, I wouldn't get into the administration, but to be even considered a good American. So you talk about deep state. If the state under Donald Trump is looking at your social media posts to put you on a naughty list or a nice list, that affects a lot of people in this country.
Yeah. Maybe they could sell Trump tote bags in the middle of all this. Rick, I want to ask you about the conversation that we had with Frank Luntz earlier this hour, because the President of the United States spoke at the West Point graduation. It's something he wanted to do that took place Saturday, complete with the MAGA hat, talk of trophy wives and drag shows. Then spoke at the amphitheater in an annual address, of course, at Arlington, that is in honor of course, for the Commander-in-Chief to lay the wreath, to speak to Gold Star families and Americans who've gathered on the most solemn of holidays. Does any of this stuff matter, Rick, when the president's talking about winning the election, insulting the former president, or is this just kind of the new era of politics? When I watched that speech at Arlington, there were people who were laughing and clapping, and I'm asking honestly if any of these conventions matter.
It's hard to tell in the environment we're in right now because we're inundated with it. I don't think there's a speech that goes by, regardless of how important the ceremony is, that the president doesn't take an opportunity to take a shot at his enemies, both perceived and former. You know, in politics, you usually, if you lose an election, you know, all the attacks go away. Not anymore. I mean, the response to the Biden people are like, hey, dude, you won. Cut it off. But the reality is going to hallowed ground, like the military academy in West Point, and not just reading the script, right? The speech itself, I agree with Frank Luntz. There are elements of it that were fantastic and inspirational for the cadets, but then to go off script and just, you know, do a campaign riff and even some things just personal anecdotes for him, just wholly inappropriate. And yet, you're right. If it happens every day, maybe 3 or 4 times a day, and the press reports it, sooner or later, I think the public does get a little bit immune to it. I mean, you see it in his polling, where, you know, regardless of what he's done over the last 120 days, the public basically has the same perception of him before he was president as he is now. Yeah. It's not getting better, but it's stable. But I would say kudos to the military. They stay above it. Frank Luntz's comments about them not being political is the reason that in the latest Harvard Harris poll, the approval rating of the U.S. military is 69%. That's 20% more than Donald Trump will ever have. And so the reality is, I think the public does get it.
Really something. Jim, I'm curious your take on all of this. You're, of course, the Democrat on the panel, and I know you're not a fan of Donald Trump, but I wonder if this stuff matters anymore in Washington. I had to notice the president showed up for the wreath laying at the Tomb of the Unknown with Pete Hegseth and J.D. Vance. Traditionally, the president would be there with the First Lady. Does any of this kind of stuff matter anymore?
Well, let's just assume that Donald Trump knows what he's doing when he's up there giving this sort of speech where he's rambling on and doing the quote-unquote weave. I don't think he gives
just a minute, by the way, Jim. I don't want to cut you off. Go ahead, Jim. We have just 1 minute.
Okay. I don't think he gives the type of speech that he gave at West Point. If the economy was going well, if people were satisfied, if the situation in Ukraine was getting better and moving towards a resolution, if the country felt that things were headed on the right track. You give this kind of speech because you need to distract from the dissatisfaction that people have right now over the first 5 months of the Trump presidency. So we're talking about this rather than high prices, rather than a slowing economy, rather than a trade war, rather than him making, huge tariff pronouncements and then reversing himself within 96 hours. So I do believe there's a method to the madness, and it's to avoid a lot of the bad news that's happening organically out there.
Jim Kessler with a method to the madness. Jim's at Third Way. Rick Davis, partner at Stone Court Capital, Bloomberg Politics contributor. Many thanks to both of you here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's a critical test on the way to Mars. Welcome to the Tuesday edition of Balance of Power. As Elon Musk prepares to address workers on the mission at SpaceX and prepares for a test launch a bit later today, critical to his plans to reach Mars in the next year. I'm Joe Matthew alongside Kaylee Lyons in Washington. Lofty goals here, Kaylee. It's all happening as well as stocks rally as President Trump pulls back on another tariff threat. And it's already Tuesday. It kind of feels like a Monday around here.
Yeah, it kind of does, although we're repeating a pattern when it comes to President Trump and tariffs. Threaten them, pull them back.
Yes,
in this
indeed.
case, just 48 hours later, after President Trump spoke with the EU Commission President Ursula von der Leyen, Europe now has until July 9th, not June 1st, to avoid a 50% tariff and negotiate. The problem is, of course, that those negotiations still could be quite difficult, even if they bought themselves a little extra time to do so.
Got a couple countries to deal with there in that block. The president, though, indicating that dates are already on the calendar for negotiations, Kaylee. And you know, we've been through this, to your point, more than once. That's all Wall Street needs to hear to rally.
Yeah, you're certainly seeing a relief playing out in equities and in the bond market today, though I wonder how much that's about tariffs or how much that's just an extension of what we saw in Japan with the kind of intervention in JGBs. I don't know. Maybe Charlie Pellet has a better idea than I do. He, as always, is keeping track of the markets for us from New York. Hey, Charlie.
Andy, good day from New York. Let's get right to the numbers here. We got ourselves a major rally underway on this back-to-work Tuesday. The Dow, the S&P, NASDAQ all surging. Stocks are jumping on consumer confidence and also those trade talks. Right now, the S&P is up 108. We're very close to session highs, a gain of 1.9%. The Dow up 650 now, up by about 1.6%. NASDAQ, the composite index, up 431. For NASDAQ, a gain of 2.3%. Our Mag 7 index up 3%. Every member of that index is advancing. The 10-year, 4.43%. The 2-year, 3.97%. Gold now down $45 the ounce, down 1.4%. $32.98 West Texas Intermediate crude down 1.3%, $60.72 a barrel, and Bitcoin 110,333 up now by 0.7%. M&A news, lots of it. Salesforce agreeing to acquire Informatica for about $8 billion. Salesforce up by 1.6%. Informatica surging now by 5.8%. And U.S. Steel shares are higher after CNBC reported that the U.S. Steel Nippon deal is, quote, close to probably happening very soon. Shares of Nippon Steel are gaining. The ADR is up 2%. U.S. Steel up now by 1.7%. New York has won a temporary freeze on potential Trump administration moves to withhold federal approvals or funds for the state's transportation projects, including congestion pricing. Recapping, stocks push higher. S&P up 111, now up 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Back we go to Washington. Once again, your hosts. Here they are, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where we are keeping our eyes on X, SpaceX in particular, which is set to begin a live stream with Elon Musk on the road to making life multiplanetary. Any minute now, we'll be monitoring that for you to see if we have any news on Mars. But we're also following, of course, news on this planet and the various countries within it that are negotiating with the United States on trade, specifically the 27-member bloc of the European Union, which, after its Commission President Ursula von der Leyen spoke with President Trump over the weekend, has secured an additional 5 to 6 weeks to try to negotiate a trade deal with the United States. The deadline, Joe, moves from June 1st to July 9th.
July 9th, markets seem fine with that. The administration says negotiations have already been scheduled. It's really hard to tell exactly what we're talking about here. The EU trade chief saying he's in constant contact with American officials. But there's also the story of countermeasures, Kaylee, that the EU is ready in case this doesn't come together. So we want to get to the White House for the latest on this. Bloomberg's Washington correspondent Tyler Kendall is on the North Lawn as we speak. Tyler?
Yeah, hey, Joe. So this longer runway for negotiations is considered to be at least a positive development for now. But to be sure, there is still a lot of work to be done. And our reporting indicates that the European Union has really felt that there hasn't been much clarity out of this White House on exactly what they need to see in order to clinch a deal. Now, Bloomberg News had new reporting this morning that the EU is going to start to focus in on some strategic sectors as part of these negotiations. Think those industries that have been subject to Section 232 investigations by this administration on the basis of national security concerns, like autos, steel and aluminum, chips, also pharmaceuticals, a really important industry for us to watch as this goes forward, since it's a top export to the U.S. from the EU. And we know President Trump is mulling that some of those sanctions on those pharmaceuticals could be coming imminently. Now, we have to keep in mind there's a few different moving parts here as these negotiations start to unfold. And it's our understanding that focusing on the sector specific. These critical sectors will happen parallel to those technical talks about tariffs and non-tariff barriers alike that this White House has been focusing in on, whether that be regulations or the value-added tax, something that Europe has really indicated at this point appears to be a red line. Joe and Kaylee, we know the U.S. wants to see the European Union start to boost its imports when it comes to U.S. agricultural products and LNG, but keep in mind that last week they rejected a proposal from the EU that would have seen both of these nations lowering tariffs down to zero on a reciprocal basis when it comes to certain industrial goods and certain agricultural products. At that moment, that didn't appear to be enough, so we're going to have to see if this really pushes those negotiations forward.
Well, and of course, when we consider what else will influence these negotiations, it's the threat of what happens if they don't result in a deal, Tyler. We know what President Trump says he'll do, a 50% tariff on all European Union goods, but what would the EU do to the U.S. if no deal is reached?
Right, exactly. And we have to keep in mind, this is incredibly high stakes. Bloomberg Economics says that if that 50% tariff ultimately went into place, it would cut EU exports to the U.S. by more than half. So with that sort of looming in the background here, we know that the European Union has already prepared a sanctions tariff package, a retaliatory tariff package in response to the original steel, aluminum, and auto tariffs that would target about $24 billion worth of U.S. goods. And that's really going after some of those more politically sensitive items in politically sensitive states. Think soybeans in Louisiana, where House Speaker Mike Johnson is from. That package of tariffs could be initiated rather quickly. And it's our understanding that the EU is also mulling some additional sanctions, tariffs, on about $100 billion worth of U.S. products. That would be more geared towards industrial goods. Think things like Boeing aircraft, too, that could be included in there. So we're going to have to see how this ultimately ends up evolving, because as you both know, the European Union is negotiating as a bloc, which means that all 27 of those member states ultimately need to agree.
Tyler, it's a good thing we've got you at the White House today. No public events scheduled unless something's changed for President Trump, which is pretty unusual. We're used to having 3 or 4 meetings with the press on an average day. Is he resting up from a long weekend of travel, or what's he up to today?
Well, at this point, as you said, no public events as of now, but that doesn't mean that we haven't heard from the president, of course, taking to Truth Social on a few different issues, including these tariffs when it comes to the European Union, but also seeming to ramp up the pressure on Russia, of course, something else that we are following closely this week, as it marks really 1 week since he had that phone call with Vladimir Putin, and we haven't really seen any real movement when it comes to getting closer to getting the Kremlin to the negotiating table. As you well know, our reporting had indicated that going into that talk last week, the Kremlin felt like it had the upper hand, that it feels like its forces can ultimately break through Ukraine's defenses by the end of the year. It's, we should note, Western military assessments don't necessarily align with that, but it does give us some more insight into how this White House is trying to counter and bring Vladimir Putin to the table, as we saw in one of the largest drone strikes against Ukraine over the weekend.
All right, Bloomberg's Tyler Kendall live from the North Lawn of the White House here on Bloomberg TV and radio. Thank you so much, as always. So as we don't have real insight as to what the president's doing inside the White House or the West Wing today, we also know someone isn't there with him who has been spending a lot of time with him to this point of his administration. That would be Elon Musk, who, of course, this week, as it is the end of May, is technically seeing his period as a special government employee expire, and as he's told investors, is shifting his focus back to his businesses. That includes Tesla, of course, but it also includes SpaceX, and that seems to be what he's focused on today, Joe, as he's planning to give a speech from the Starbase SpaceX facility in Texas, a live stream that we're waiting to begin any moment now on the road to making life multiplanetary. So maybe less on politics, more on space exploration.
And he tweeted to that effect, or X'd to that effect, over the weekend. He's going to be sleeping in the server rooms and on the manufacturing floor. I guess SpaceX is part of that. It's really interesting, though, to think that this is happening today. We've got a couple of interesting moments, not just the speech, but also a test launch that they say will be critical to the way forward. He wants to get to Mars by the end of 2026. Not a manned mission necessarily, but that would be quite remarkable from someone who has overpromised from time to time on things like this.
Yeah, well, and the vehicle that would be required to get to Mars, the Starship, is what is going to be a test launch today on top of a Falcon Heavy rocket. This would be the 9th test flight of the Starship, keeping in mind the last 2 didn't necessarily end very well, as we saw explosions over the Gulf. So they're hoping that it goes better this time around. We want to get into all of this now and turn to Mike Shepard, Bloomberg Senior Editor for Technology and Strategic Industries, who's here with us in our Washington, D.C. studio. So I guess if we take things in sequential order in terms of what we're going to see today, Mike, first the speech from Elon Musk. Do we expect him to be outlining anything new really here when it comes to his efforts to get to Mars, or is this just kind of an annual rah-rah, we know the long-term goals?
We haven't heard from Elon Musk. When you say annual, it's a good choice of words because he has not given us a real update. The way he's done quarterly with Tesla during earnings calls, he hasn't really done that with SpaceX for about a year. So people who are curious about the program and even the private investors who hold stakes in the company do want to hear what is coming next. But more importantly, they want to know what is coming now because, as you said, the last two launches didn't go as well, didn't go as planned, and they certainly did not augur well for his goal of getting a payload with robots on it in flight heading to Mars by 2026. That's an ambitious timeline, and he would have to show some progress at the company level in resolving some of the glitches that caused those two launches, the last two launches in January and March, to be cut short.
Remembering, of course, Elon Musk's very ambitious timelines for self-driving cars, for robotics, for AI were not realized on the first timeline that he issued. In fact, we're still waiting for some of them. Is this different?
We will know if it's different after the 6:30 launch window opens this evening.
Well, that's how important this test is.
This really is because if it doesn't work out the third time, it will indicate that maybe they have more work to do, and perhaps more work than even Elon Musk was anticipating. And hence, as you noted, Joe, he was indicating that he was willing to pour himself back into it. Now, he also has to pour himself back into Tesla, which is another venture that is under quite a bit of pressure to deliver in certain areas. And you mentioned one of them, of course. This is the lower cost EV that the company has been promising. And so where does he go from here? I mean, he really has to put a lot of attention into these two things. And of course, this is a very high profile moment. Millions will be watching on television to see how this latest, and remember, SpaceX is, for the moment, one of the biggest games in global space travel worldwide. So it naturally gets a lot of attention. And his vision and his promises really capture a lot of people's imaginations, too, even if there is quite a bit of skepticism, as you noted, Joe.
Well, and when we consider that SpaceX is a leader in kind of the private side of space exploration and just commercialization of space overall, he also has had a very public-facing role affiliated with the U.S. government for the last several months. Do we have an idea as to whether or not that relationship is going to feed back into the efforts of SpaceX through government partnerships or NASA, et cetera, more so than they already were?
Well, what we've seen is SpaceX gaining more contracts, but it's unclear whether
correlation,
that is
causation.
Correlation, causation, whether the company does deliver. They have reliably put payloads into orbit for government agencies and for private customers as well. So they do have a track record, and that is why the Pentagon and NASA and even some of the intel agencies have been turning to SpaceX in recent years. And this is why their name is also in the mix for President Donald Trump's Golden Dome missile defense project, which would require more satellites and more objects in the air to do that kind of surveillance and monitoring of the skies to prevent a missile attack on the U.S. Some of the other things, though, that may benefit SpaceX from Elon Musk's time in government may occur more on the regulatory side. His choices, for example, at the FAA and at NASA really kind of paved the way for SpaceX to have a little bit more of its will exercised at the government level. The FAA perhaps maybe putting a little bit less scrutiny on the launches than it might have gotten under President Joe Biden, for instance.
Kayleigh mentioned something that is kind of amazing. What are we, 130 days in? Was that the duration of the government contract that Elon Musk is now winding down? Presumably Friday is his last day as a full-timer, if I can even use that term. How are we looking at this? He said he's not going to be a total stranger to Washington, but he's also, to your point, bearing into his own work here at Tesla, at SpaceX, and beyond. Is there going to be a goodbye party on Friday?
Well, I don't know if there'll be a cake. And in fact, he's been receding, Joe. And we've even talked about this offline, how he has been receding from public view here in Washington in the past month. And he started off very strong, but then on April 1st, he had that big high-profile setback in the Wisconsin judicial election where he had put a lot of money and put his name on the line only to see the favored candidate, the conservative candidate, end up losing. And that put a little bit of egg on his face and also the Republican parties. That election was viewed as a referendum not just on Donald Trump, but also on Elon Musk himself.
Speaking of Elon Musk, I do want to break a little news straight from Elon's X feed.
Oh, nice.
His talk, which was scheduled for 1 p.m. Eastern Time, obviously still has not begun, is now postponed until after the Starship Flight 9 launch tonight.
Wow. How about that?
So keeping in mind that launch window opens at 6:30 local time, so 7:30 p.m. Eastern time, that could mean we're well into the evening by the time he actually gives this
That also
speech.
means he gathered the world for an address and canceled it while they were waiting for it to begin.
Yeah.
Postponed it.
By 8
Interesting.
hours.
Maybe he didn't have great news to share. I wonder what happened here.
Yeah, well, considering the conversation we were just having, Mike, about how important this launch is after two that obviously had failures that ended their efforts early in the launch. Is this just he wants to see how this goes before he paints a picture for the future, characterizes, okay, clearly we have more work to do, or look what we've done. We can meet these goals.
Well, you know, Kaylee, most of us look before we leave. And in this case, he may be wanting to see what the results are before he promises them and talks about them. And remember that, you know, with many of these rocket launches, not only by SpaceX, but by other space ventures over the years, how many times do they get scrubbed because of some malfunction, some small glitch, some little thing that happens that makes them say, oh, no, let's wait. We'll wait a day. We'll wait a week. And Elon Musk may be waiting to make sure that everything is locked in that they really are ready to go and that he'll have something positive to talk about.
We're all going to be obsessing over the chopsticks, catching the bottom half of this thing later on. Mike, I know you're not an astronaut or a space analyst, but you're getting pretty close here. What qualifies as a success to see the upper stages actually get into orbit?
Something along these lines. It would be something along those lines. They need to demonstrate that this will be able to reach the altitude at which they can deploy 8 test Starlink satellites. And this is what they had hoped to do in one of the past tests. They will be aiming to do that this time around. That'll be a key benchmark, of course. And this is for a company that SpaceX valued at $350 billion, as much as Home Depot.
Amazing. Mike, thank you so much. It's on to test number 9 with the help of Mike Shepard with us here in Washington alongside Kaylee Lines. I'm Joe Matthew. We'll have ears on whatever Elon Musk says later on today. Stay with us with much more on the fastest show in politics on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index trading very close to session highs right now. Stocks are jumping on consumer confidence and trade talks. The S&P up 112, up 1.9%. The Dow up 662. That is a gain of 1.6%. Nasdaq Composite Index up 452, higher now by 2.4%. The Bloomberg Mag 7 Index up 3.1%. The 10-year 4.44%. The 2-year 3.97%. Gold is down $41 the ounce. Spot gold now down 1.2%. 33.02 on the precious metal. West Texas Intermediate crude down 1.5%. 60.61 a barrel. And Bitcoin up 0.5%, holding just above $110,000. Trump Media and Technology Group, the company behind Truth Social, has agreed to sell around $1.5 billion in stock and $1 billion in convertible bonds to buy Bitcoin for its treasury. Trump Media is the latest company connected to President Trump to invest in crypto. PSQ Holdings, which his son Donald Trump Jr. sits on the board of, also announced plans today to explore a digital asset treasury strategy. Shares of PSQ, they're up by 32.6%. GJT shares, they're down by 9%. Again, New York has won a bid to stop the government from freezing funds in its congestion pricing fight. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at the markets. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew in Washington, where the decisions of President Trump is very much influencing financial markets. The relief rally underway today after he decided, after a phone call with the EU Commission President Ursula von der Leyen, to re-extend the deadline for reaching a trade deal with the European Union to July 9th to avoid a 50% tariff going into place. So we're seeing some de-escalation on the trade front. We're seeing even more escalation when it comes to a different fight this Trump White House is engaged in, and that, of course, is the fight with Harvard University. Having already frozen the funding, or a large amount of government funding to the university, having attempted to block Harvard's ability to enroll international students. Of course, that has been stayed for now. There's a hearing in that case scheduled for later this week. Now the administration is moving to cancel all remaining federal contracts with Harvard. Joe, that's worth an estimated $100 million. So another shot fired in this battle.
Yeah, this is a big one. We talk about federal funding being cut, but we also remind ourselves how much business Harvard actually does with the federal government as a contractor. You're right, $100 million, according to a person with knowledge of the matter. And we can go even further while we're at it here. The president also threatening to divert billions of dollars in the grant money, not just killing it, but sending it to trade schools, he says, all across our land. What a great investment, he wrote, that would be for the USA, and so badly needed. Janet Lauren is with us right now, who covers education, higher education, finance for Bloomberg at World Headquarters in New York. Janet, we've been talking about this. It's great to have you back with the latest salvo, and I'm curious, which is more meaningful? We could use some perspective here because the president is firing a lot of salvos at Harvard. Is it more meaningful to lose these federal contracts than it is the federal grant money, or the other way around?
Well, I think the federal grant money is the lion's share of the $2.6 billion that have been frozen from the federal government. Yes, you do forget that we're talking about private universities, but the federal government has a lot of influence on a lot of purse strings. So grants and contracts, but also revenue that comes into universities like Harvard from international students. You just talked about a halt in student visa interviews. If you look at the number of international students at Harvard, it's about 27% of the entire school. And if you look at other people who are coming to do research or fellows that are not getting degrees, it's about 10,000, and that also includes their families coming on visas. So it's quite a sizable hit after hit after hit, and what's next?
Well, that's an excellent question. You never know what's coming next, and you never know what headline's going to cross the Bloomberg terminal, Janet. I do just want to quickly mention some breaking news from Semaphore regarding Neuralink. Having just spent a great deal of time on this program talking about a few of Elon Musk's companies, SpaceX and Tesla. This one, of course, one of his as well, Neuralink, has just raised another $600 million at a $9 billion valuation. Again, this is according to Semaphore. We'll have more on that story if Bloomberg is able to confirm that, but fresh cash coming in for Elon Musk's Neuralink. Janet, to go back to the Harvard story, you mentioned the memo from the Secretary of State Marco Rubio ordering U.S. embassies to stop scheduling interviews for student visas. Knowing that this fight with Harvard in particular about its ability to enroll international students is going to be borne out in court this week with a hearing, what if the U.S. government just stops vetting students altogether? That theoretically could have implications well beyond Harvard.
Yes, it could. There's more than 1 million international students in the U.S. At a host of schools, and international students, often pay the full price, so they're helping to bolster aid for other students. But they also come in and they spend money wherever they are. And you look at that amount of students, it of course dropped during COVID when students weren't able to come. But it's a big impact for schools, especially those that have large shares of international students on their campus. Remember, there's a demographic cliff where starting around this year, the numbers start to accelerate of fewer U.S. students just because of sheer demographics.
We should note that Harvard is suing the government over the funding cuts, the international student ban. Here, Janet, we're not done yet, right? There are a lot more lawyers who are going to make a lot more money.
Yes, there's a hearing coming up this week on the international student ban, and they filed a larger lawsuit in April following demands put from the Trump administration on a whole host of issues.
All right. Janet Lauren, thank you so much for joining us with the latest on Harvard. And Joe, I would also note today, as we consider where this expands beyond Harvard, that Leo Terrell, who leads the Justice Department's anti-Semitism task force, also said on another network in an interview today that the administration is going to expand its probe beyond the Ivy League institutions to other schools, including the University of California system. So these tendrils could spread much farther.
Well, it's important. We actually haven't talked about that. That is the motivation here, according to the administration. It is to crack down on anti-Semitism, which is something that the Harvard folks push back on vehemently here. And it's something that is reverberating through this whole space. Whether this has tentacles that will reach other universities remains to be seen, though. Kaylee, we'll spend a lot of time looking at that hearing later on this week.
Yeah, we absolutely will. And we'll spend some more time talking about what it could portend in terms of this fight between elite institutions in the Trump administration with Rick Davis, Bloomberg Politics contributor, Stone Court Capital partner, and Republican strategist. Rick, I feel like we've talked about this at length with you on so many days already, is it just doesn't seem that this fight is going anywhere. If anything, it only seems like it's getting worse. Is this even about Harvard at this point, or is this like in the case of the Albrego Garcia case, for example, when actually it's about a much wider issue about the administration's efforts on immigration or the administration's efforts on anti-Semitism, and someone just has to end up being the ultimate punching bag?
Yeah, look, I mean, I think the administration is particularly good at using fear, intimidation, scare tactics to influence public opinion. And so the Abrego Garcia case is exactly the thing we're talking about here. It's a symbol. It's got really nothing to do with his status as a Salvadoran in the United States. And yet they've used this very effectively of saying, this is our battle against crime. This is our battle against, gangs. This is our battle against illegal immigration. And it becomes a symbol. Well, Harvard's become the sort of anti-woke symbol, right? I mean, Donald Trump started his campaign losing in the early stages of the primary against Ron DeSantis because Ron DeSantis had plugged into this wokeism. And Donald Trump is now implementing an anti-woke campaign in the form of his attacks on higher education in a way that nobody could have ever accounted for at the time of the campaign. And so he's throwing every asset of the federal government. He didn't understand this in his first term, but now he's surrounded by people who have made a deep study of it. Every asset of the administration against Harvard, because Harvard is the symbol of anti-Semitism, at least he wants to make it that way, of liberalism. He's going to really drive that wedge. of all this wokeness that has, permeated college campuses around the country. So he's really using these as symbols to be able to position his administration and at the same time create the kind of, I would say, destructive counterforce for his own movement, the MAGA movement.
Harvard's also a symbol of old money, Rick, and you don't need me to tell you, with a $53 billion endowment. The president is suspending more than $2.5 billion in federal research money, which was a big story. That was the first salvo against Harvard here. When you consider the public perception of what's going on, if you have a $53 billion endowment, the Treasury Secretary is calling you a glorified hedge fund. Why not take $2.5 billion to fulfill the federal research money that's gone missing?
Well, I think that the question is how much of that is going to come under attack. If they lose their 501c3 status, that could result in almost $850 million a year in tax exposure. So all of a sudden, a $2 billion loss of grants over a 10-year period is nothing compared to an annual bill for Harvard if they're treated like a corporation at $850 million. So again, it's another tool that the administration uses. And of course, this can extend far beyond Harvard. Environmental groups all anticipated that Donald Trump would try to pull their C3 status, around Earth Day and result in them having to pay taxes on the income that they raise as part of their mission. So it's not just universities. It can be any advocacy group that serves the public good. And Donald Trump will become the arbiter of what is public good.
Well, when we consider that public good, Rick, what good does it do the public good if we have more difficulty attracting talented international students, or if the process for them to actually secure visas to attend U.S. universities and perhaps stay and work here is slowed down or paused entirely while they figure out new vetting?
This is the key, Kaylee. Every single invention that is rooted in the building of an iPhone, for instance, had its germination in universities. And a lot of those universities have had a lot of their technological advancements due to foreign students who are the creme de la creme of their intellectual societies, come to the United States, to Ivy League schools, to state schools, to private universities, and they add enormous value. And since World War II, technology at universities have been responsible for virtually every major technological advancement and put us first in the world for technology. And that has driven our success across the board with our military, with our businesses, with our society. And so as much as we like to beat up on technology, it is the reason we are where we are, which is the most advanced, wealthiest, and most secure country in the world. And so the minute you start dismantling that, withholding grants, going after students, these are institutions that have led to the legitimacy of the country and our wealth and prosperity and safety since World War II. And so I think everybody's going to really wonder, what are we really trying to do here?
That's Rick Davis, partner at Stone Court Capital, Bloomberg Politics contributor, only here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks continue to move higher, very close to session highs right now. Wall Street kicking off the new trading week with big gains on renewed optimism about the economic trajectory. Right now, the S&P's up 109, higher by 1.9%. The Dow up 637, up 1.5%. NASDAQ up 440 for the NASDAQ Composite Index. That is a gain now of 2.4%. The Bloomberg Mag 7 Index is now gaining 3.1%, with the 10-year at 4.43%, the 2-year 3.97%. Gold down $41 the ounce to $33.02. That is a drop of 1.2%. West Texas Intermediate crude down 1.4%, 60.67 a barrel, and Bitcoin right now up 0.6%, $110,200 on Bitcoin. Advanced Micro Devices shares higher after HSBC upgraded the chipmaker to hold from reduce. Shares advancing now by 4.4%. And Southwest Airlines shares are higher after Jefferies upgraded the company to hold from underperform. Southwest up now by 5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington. Thanks for being with us on this Tuesday edition of Balance of Power on Bloomberg TV and radio, on a day where we don't actually expect to hear from President Trump, at least not on camera. He's not planning to speak with reporters. There's no events on his public schedule, but we are still hearing from him on Truth Social as usual. And on an interesting subject today, is his most recent Truth Social post, Joe, warns that Vladimir Putin of Russia is playing with fire. He says what Vladimir Putin doesn't realize is that if it weren't for me, lots of really bad things would have already happened to Russia. And I mean really bad in all caps. This is, of course, after over the weekend, he said Vladimir Putin is now crazy.
That's right. He called him crazy in all caps, exclamation point, as Vladimir Putin continues to bombard Ukraine. Missiles and drones, killing civilians, not even targeting military installations in some cases, which is confounding Donald Trump. Not sure what he's referring to in this tweet, though, or this truth post. Lots of really bad things would have already happened to Russia, making many ask if that's with regard to sanctions or something worse.
Well, keeping in mind that he also did tell reporters that he is still considering further sanctions on Russia. And we know there's legislation in the Senate in the works that would do just that, spearheaded by Lindsey Graham. But it has 80 co-sponsors.
Yeah, that could happen pretty easily based on what we've heard on Capitol Hill. And that's why we are joined by Kate Sullivan, Bloomberg's White House correspondent, with us here in Washington, D.C. Kate, it's great to see you. The president has no public events scheduled, but he's got us talking with Truth Social posts all the while. Is he serious about sanctions?
You know, it's a great question. This is not the first time that he's threatened sanctions on Russia, right? And he's talked about, back in March, he was talking about these secondary tariffs on Russian oil. We've seen this progression of Trump getting more and more frustrated with Putin and with Russia and the pace of these negotiations. It's very unclear how serious he is about implementing these. You know, he is... we've seen over and over again how he will make these threats, and it seems like most of the time it's just a tactic to get people to come to the table. And so it's very unclear at this time how serious he is about implementing this.
Well, what about just his attitude overall? In the post we mentioned, in which he says Vladimir Putin is crazy, he led the post by saying, I've always had a very good relationship with Vladimir Putin of Russia, but something has happened to him. He has gone absolutely crazy. It's not I was wrong about him. It's that he has changed, Kate, is how he's characterizing this.
Right. And it's pretty remarkable because this has been a bit of a slow burn. I think, you know, we've seen signs that Trump is getting more and more frustrated with the pace of these negotiations. He, you know, has always still said that even as he was expressing these frustrations, he said that, you know, he was still confident that Putin wanted to make a deal and that he wanted to come to the table. I actually asked Trump about this a few weeks ago in the Oval Office, and I said, you know, do you think Russia is playing you? And unsurprisingly, he balked at that question and said, you know, nobody's playing me, nobody's getting played. But he also still signaled confidence that this deal would be made. And so I think what we're seeing is Trump realizing that maybe he doesn't have the relationship that he thought he did with Putin, or maybe he doesn't have the understanding that he thought he did with the Russian president. And I think it's really frustrating to him because ultimately it's making Trump look ineffective, and it's really cutting at the heart of this brand that Trump has been trying to project for decades, right? That he's this master negotiator and deal maker. You know, this was part of his stump speech. He said every day on the campaign trail, I heard him say it at every rally, that he could end this war in 24 hours. And then at one point he was saying, I could end it before I even take office. And so this is really just undermining a lot of what he's been putting out there in terms of the image he wants to project as a president.
I'm sure it's quite an experience to be a journalist and ask Donald Trump if he's being played. What was his response? Who are you with?
Yeah, I've gotten that one before. And I would say, you know, I phrased it that way. He had said something like, I know when I'm getting played. And so I followed up by saying, well, do you think that you are getting played? And he said he did not think that he was getting played. But, you know, of course he would say that. So,
You're doing great work for us down there. That's not for the faint of heart.
For the brave, indeed. Kate Sullivan, Bloomberg White House correspondent, thank you so much. And we want to get more into the state of the war and what signals this sends about the U.S.'s continued involvement or not in attempts to end it, and turn to Ben Jensen, director of the Futures Lab and senior fellow for the Defense and Security Department at the Center for Strategic and International Studies. Ben, thanks for being with us on Balance of Power. When we consider the idea that President Trump is now threatening that Russia is playing with fire, that he's still saying he's open to sanctions, is there any fire the U.S. could fire at Russia that would actually be enough to influence the behavior of Vladimir Putin at this point, when, to this point, that hasn't worked? Sanctions have had very little effect on his behavior.
So thanks for having me. And let's start by saying you're framing the question spot on. The real Achilles heel of Russia, despite its ability to continue a protracted conflict, is the dire state of its economy. When you look at the currency, you look at interest rates, and then you think about the structure, how its economy has fundamentally been rewired to do nothing but be a larger version of North Korea and Europe, to wage successive campaigns, increasingly through missile salvos targeting Ukraine. I think there is the ability to play with fire and a couple of levers. One is you actually have to expand the scope of sanctions to go secondary sanctions that actually hit financial transactions that deal with Russian hydrocarbon products. Now, if you do that, you're going to have to keep Europe on board. You're also going to have some uncomfortable allies, because ultimately what you want to do is make Russian oil more expensive, Russian gas more expensive, and that actually hurts them, meaning it costs them more to produce, and they don't get as much of the return on their investments. And that's actually really important, because we already see, you mentioned earlier in your show today, we already have oil prices are down over 1% today. So if we have a natural dampening on oil prices at the same time that we have a more concerted sanctions package, we can at least squeeze the ability of Vladimir Putin to wage war. Now, to be fair, that's still going to take time to actually impact his battlefield performance, given that he's got consistent support from both China and Iran, and has found ways to kind of turn on the Russian economy into a war economy.
Hey, Ben, it's great to have you back. Let's talk about his battlefield performance, because last time you were with us, you showed us your Russian firepower strike tracker, which people can Google and look at this online, which shows us a massive increase in missile attacks by Vladimir Putin, the daily tally of Russian missile attacks since Donald Trump has become president. Is he trying to seize on a closing window to do as much damage as possible before there's a peace deal, or it's just open season under Trump?
So I don't think it has as much to do with the Trump presidency as much as Vladimir Putin's perspective on how you negotiate from a position of strength. And that is sadly to hold the Ukrainian population hostage. And as you mentioned, the firepower strike tracker, let me break down what we saw in the last 72 hours, because the numbers are stark. In the last 72 hours, we had 355 Shahed attacks. That's the largest in a 72-hour period since the war began. And worse still, 70 of those weapons got through. When I say 70, to put that in perspective, that means over 7,000 pounds of high explosives hit Ukrainian cities in the last 72 hours just with Shahed drones. And it wasn't just Shaheds. There were 23 ballistic missiles fired in this period. Now, normally, you only see 1 to 2 ballistic missiles fired per day. So 23 in a 72-hour period is a massive increase. And you also saw 62 cruise missile attacks. Now, when you put that all together, that means you have over 1 1,000 one-way attack drones, ballistic missiles, and cruise missiles that were largely targeting Ukrainian critical infrastructure, civilian populations, and political centers of gravity, almost as if it was a slight to our president and anyone who thinks that Putin isn't in this war for the long haul and going to try to settle this on the battlefield, or at least seeing if he can break the will of the Ukrainian people during this kind of pseudo-negotiation period we're in.
So, Ben, are you saying that this is more about the psychological impact of these strikes than actual territorial advances Russia is trying to make?
That's a great question. And yes, I do think that. In fact, as part of that firepower strike tracker, we've done two recent studies. One study called Drone Saturation, which really looks at the profile of the Shahed attacks. But to your question, the more important one is called Operational Fires in an Age of Punishment. And what we statistically prove in that is that Russia has decoupled its strategic attack forces, its ballistic missiles, its cruise missiles, its Shahed drones, from its operational level battlefield objectives. Meaning in modern war, when you have precision strike, we would expect to see a tighter coupling of these deep fires with operational ground maneuvers. And we statistically can show in that report that nothing could be further from the truth. It appears to be that like Shahed, so those attack drones, cruise missiles, and ballistic missiles are literally used as a psychological tool, which is a throwback to theories of air power we haven't seen since before the Second World War, wherein bombing to win meant directly a psychological effect upon the population to then convince leaders to sue for peace. So I think you're onto something. This is more about psychology. It's a coercive campaign. It's a punishment campaign. It has very little modern traditional military utility or logic. It's a throwback to almost a time long gone by.
Well, clearly you're onto something here, Ben, and at the risk of asking the dumb question here alongside Kaylee Lyons, how do you know all of this? Is this based on satellite imagery? You're speaking like you're on the ground in Moscow.
Well, I'd probably be put in jail if I was there. So a New Year's resolution, don't go to jail this year. No, most of this comes from math. It's not magic. One of the fascinating things about war in the information age, when everything is counted and tracked, is if you take time to use basic data science, which your listeners and viewers know well. I mean, everyone who has a Bloomberg terminal has been doing this for decades. It's using data patterns that you find to statistically isolate key patterns and trends. And in this case, that means we can analyze how Russia attacks Ukraine on a daily basis and test a series of hypotheses and really isolate where we find particularly interesting correlations. And in this case, the major correlation we found in that operational fires in the age of punishment was that decoupling of what we would call operational art or large-scale campaign ground maneuver. So when combined arms armies target parts of the Ukrainian front from these deep missile attacks. And that runs contrary to what we've seen in the modern history of war and does look a lot more like theorists like Duhay, who wrote theories of air power really before World War II.
Ben, you spoke a moment ago about Russia's ability to continue to do this because of the support it's still receiving from China and Iran. Is that indefinite? Can it keep up this pace in perpetuity, or will even the flow of support from those adversaries not be able to keep pace with this kind of strike concentration we're seeing like this?
Yeah, you're asking the critical question, because every time economists have believed the Russian economy was about to fail, it holds on for just another day. It's as if suffering is becoming a way of life. So in some sense, Russia has already converted its economy to look more like North Korea than Germany, and I don't think that's going to stop when this war ends. So the real answer to that question becomes the resiliency of that war economy. Now, again, the numbers are telling. If we compare the volume of Shahed, these one-way attack drones, and we know that Russia built its own domestic manufacturing, so it no longer imports them purely from Iran. It basically builds the drone. Sadly, it still smuggles in electronics from around the world to guide these drones. We've seen a 10 times increase. Now, think about that for a second. In the space of a year, despite sanctions, despite a high interest rates, despite a low currency, despite every negative economic indicator you could think of, Russia has still managed to increase its production of Shahed drones by 10 times. The Department of Defense, Secretary Hegseth, would, I mean, literally probably hug any defense manufacturer who could promise that degree of scalability. We can't do it in the U.S. right now. So there's something going on behind the scenes. We know China is providing
Ben, come back and see us when we have more time. That's Ben Jensen, CSIS, from Giulio Duhé to Russian firepower. We appreciate the conversation on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yeah, it isn't Monday, although I keep thinking it's Monday. It's Tuesday, long holiday weekend. We get it, we get it. Some enthusiasm, Tim, too, in the markets today.
Yeah, I mean, we're going to hear from Charlie in just a minute, but suffice it to say, we're up more than 2% on the S&P 500 and the NASDAQ composite. I mean, a lot of things moving the market higher, Carol.
Yeah, some upbeat consumer confidence data, although, as you reminded before we started on air, some caveats to the data, which we'll get into a little bit later on. EU, US, maybe some ease in the trade tensions that are out there. Don't forget, it's a big week, folks. We get NVIDIA earnings, and we've also got minutes from the FOMC. So we got a lot going on that's going to maybe help shape direction here.
Yeah, we got a great crew helping us out over the next hour. We're going to hit on EU tariffs, Harvard, and more. We're going to have a DC roundup coming up in just a few minutes.
Plus, Salesforce buying Informatica. We'll get into that. We've got the CEO of Xero on investing in the United States. They're looking to grow really their revenues in North America, Tim.
And what is the Fed to do? Fortunately, I don't have to answer that question because I'm not Jerome Powell, which, you know, Carol, I'd say he has probably one of the toughest jobs out there.
Yeah, I would definitely agree. But our own Mike McKee checking in with one of the Fed officials, so we're going to talk about that in just a moment. Let's get to that trade. Let's get to the rally, at least the equity rally. Here's Charlie Pellet.
Hi, thank you very much. Happy Tuesday to you both, and a happy day for the bulls. Right now, we are at the best level of the day. Indeed, another leg higher since our last update, with the Dow, the S&P, NASDAQ all rallying. Consumer confidence rebounding sharply as the EU and U.S. speed up their trade talks. So right now, we've got the S&P 500 index gaining by just about 2.1%. The S&P up 120, again, best level of the day. The Dow up 732, now up 1.8%. NASDAQ's up 2.5%. The Russell 2000 index of small cap shares also gaining 2.5%. And the Bloomberg Mag 7 index now up by 3.3%. The 10-year yield 4.43%. The 2-year 3.97%. Gold down to $42. 33.01 down 1.3%. West Texas Intermediate crude down 1.3%, 60.76 a barrel. Merger and acquisition news. Salesforce is acquiring Informatica for about $8 billion, barely a year after an earlier effort fell through. Shares of Salesforce up 1.8%, Informatica up now by 6%. And U.S. Steel shares higher after CNBC reported that the U.S. Steel Nippon deal is going to close probably, quote, very soon. U.S. Steel up 1.9%. ADRs of Nippon Steel, they're up by 2%. So again, recapping, stocks higher, S&P up 2.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, breaking down the trade. As you heard, stocks, certainly here in the United States, we've seen a bit of a rally as those trade tensions between the U.S. And the European Union seem to be cooling off just a little bit. We also had some stuff going on in Japan. There's a lot going on. And we wanted to kind of kick off this hour, Tim, with a little bit of what's going on in D.C., because it feels like there's a lot of stuff on from different areas kind of coming at us.
Yeah, kind of like confusing about where even to start. Let's go to Hadriana Lowenkron. She's a White House reporter joining us from our Washington, D.C. bureau. Hadriana, good to see you. I do want to start with what happened over the weekend, and partly that's why we're seeing the market higher today, between the U.S. and Europe, because a lot of folks went into the weekend with the idea that come June 1st, we'd see 50% tariffs on goods coming from the European Union, because that's what the president posted to social media. But then sort of a reversal, or maybe a pause, a bit of a delay. What's the latest?
Right. I mean, and this is not, this is something that we have seen before. You think one thing based on a truth, and before we even get the story out, there are already, completely different details and things change. But to your point, what we are seeing does seem to signal a bit of easing in these relations. And we know from what the president has said before, which was that the EU has essentially really only been in place to essentially stiff the U.S. This is a quote from the president, and so that was the mindset that he had when he did threaten to increase the tariffs on Friday. Now what we're seeing is that there will be more communication, and that has, of course, eased the markets. But it's important to note we still don't have many details on when those talks will exactly take place and what they could look like. We know what the EU has said that they're going to focus on, which is some of the tariff and non-tariff barriers and some of the sectors, steel, aluminum, auto tariffs, things that the U.S. has been investigating with their Section 232s, but really still not a finalized deal. We know from officials they are saying that we could maybe get some this week, and India could maybe be one. But the EU is tricky, we know, because it's a bloc and they need to negotiate as a bloc, and that has been something that's been frustrating the U.S.
Right. Hey, Joanna, we lean on you guys because you're in and out of this stuff on a nonstop basis. Totally get the headlines. What's the kind of the view? Is this more the art of the deal from the Trump administration, the negotiating tactics that he and his team kind of use with various allies of the United States, even non-allies, but I mean, kind of this back and forth? Should we assume that things are not going to be as onerous, that that's the end game here? Or, I don't know, what's kind of the inside story here?
Yeah, that's what we're kind of being signaled to from our sources, is that there's always going to be this back and forth. This is something that the officials praise with the administration as to how he does these deals. He is, doing a lot on True Social, and that, of course, is where we're seeing the markets move. But right now, and so the back and forth definitely concerns investors. But this is something, when we're talking to administration officials, they're saying this is how it's going to be, and that there has been precedent for things working. So we'll continue to see and hopefully glean some more details as to what these talks will look like. But as of now, we're really continuing to follow this. And yes, there could be even more change tomorrow. So we'll keep you updated on that.
Hey, we got a couple more things to get to. And again, as Carol mentioned, we're kind of doing this roundtable because we're catching up after 3 days of really what happened was a busy weekend, despite the fact that it was a holiday weekend. Thinking about this from the perspective of what's happening in Washington with FOMC, we're going to hear from them next week. The economic data that we're going to get, we got some positive economic data a little earlier. When it comes to trade, where else could we see a deal besides the European Union, besides India? What's the latest when it comes to China?
Yeah, that's a good question. I mean, India, I did just want to go back to India because that's something we heard as early as this morning. And this is something that my sources are telling me that they're hearing because of what they've kind of been able to do with the non-tariff barriers there. On the China front, we are still chasing that. Obviously, there were talks, between trade officials recently, and that's something that we're still looking into. But I'm hearing India a bit more as something that could be next, and that's according to Hassett as early as this morning.
Hey, Adriana, what do we need to know about Harvard? Because once again, in the crosshairs, it was something that we were certainly, you guys too, obviously covering late last week, but it looks like once again, Harvard caught in the crosshairs with the administration.
Absolutely. I mean, as we started off the show with this idea of potentially a de-escalation on the trade front, but we are seeing things ramp up on the immigration side of things. Harvard, again, kind of stuck in these crossfires here. The latest being this effort by the administration to restrict students. This is the latest example of restrict students' entry into America right now by halting the visa appointments for students who are applying. And this is something out of the State Department that, of course, coming on top of what the Department of Homeland Security has been trying to do that essentially has already created a lawsuit on top of another lawsuit. So it's just the latest here. And again, the 27% of Harvard students are international, and these are people that really are helping the economy in the nearby areas, as well as helping with companies who are seeking to invest in. Just the other day, Kevin O'Leary, who is we know from Shark Tank, and he's someone who's taught in the Harvard Business School, said himself he's investing in these students, and he actually said, quote, these students do not hate America. And so there's definitely some back and forth there. He is hoping, investors are hoping, that the president of Harvard and the U.S. administration are able to work things out. But of course, everything is caught up in this legal battle, and that takes time.
Do we have time for Putin, Carol? We should do something.
Just 30 seconds, Adriana. What do we need to know? Because it does feel like there's some criticism coming from President Trump. It's hard to tell his relationship with President Putin, but it does seem like there was some stuff he put out on social. He said, what Vladimir Putin doesn't realize is that if it weren't for me, lots of really bad things would have already happened to Russia, and I mean really bad. He's playing with fire. So just 30 seconds here. What do we need to know about where the White House is right now on the Russia-Ukraine war?
Yeah, I mean, this does appear to be an escalation, but we do know over the weekend he had also indicated his frustration, and we know there has been reports out there, and he has said that he would, absolutely consider sanctions, and we know on the congressional side of things that there are members who are working on having kind of a package there for when that is decided. So there's definitely a lot to follow there, but keeping in mind, of course, that he has continued to make the statements, but it's a question of what happens kind of beyond the statement, and that's what we're trying to look into to really see what can bring the Kremlin to the table.
All right. Appreciate the update. Lots going on. Hadriana Lowenkron, White House reporter at Bloomberg News, out there in our D.C. bureau. Tim?
All right. Well, that's the latest in terms of what's happening at the White House and the latest from Washington, D.C. Let's go to the market moves that we're seeing. We mentioned what we saw in the equity market, up more than 2% on the S&P 500 and the NASDAQ composite. But what about how investors are feeling about credit and the U.S. credit markets? For a strategy call on that, we bring in Megan Robson, head of U.S. credit strategy for BNP Paribas. She joins us here in the studio. Megan, we're seeing yields lower across the curve right now. You and your team, though, are pretty cautious when it comes to credit markets. What specifically are you concerned about?
First of all, thank you for having me. We do have a bit of a more cautious view. So we've seen a pretty vicious rally since the pause in the tariffs with China. And two things have let that continue. One is positioning. So investors heading into the Liberation Day and right following, we're very underweight credit. So once we got this positive catalyst with China, they felt a need to catch up and to add to risk, and that's really pushed spreads tighter. The second element is the data. So far, credit has not had to see any bad data, so we're just sort of in this great area where data doesn't reflect the tariff reality yet. But eventually, we do think heading into the summer, some of the data will soften and credit spreads will start to drift wider.
What's top of mind for you and your team? I think it was interesting. We were all trying to make sense, I think, coming in this morning. It seemed like the easing on EU-US tariff, or at least trade tensions. Some news out of Japan, trying to understand, and I would love for you to roll that in because I feel like, the world is watching global bond markets, especially the longer end of the curve, and just, kind of nervous about some of the demographic and other major trends. Talk to me about Japan. What do we need to know about that?
So it's, you're spot on. I think this is very top of mind for investors. If we see a further sell-off in rates, a further sell-off in the long end of the curve, not just in the U.S., but with Japan, if it's a global phenomenon, do foreign investors start to sell U.S. credit? It's definitely a concern. So far, we don't have evidence of that. So we just got the Treasury data for March. Investors actually added to the corporate market. We'll see what happens in April. But for now, this yields higher, Treasury yields higher, spreads tighter, has been the dominant dynamic so far.
What's the thing that you and your team worry about longer term if this sticks?
We worry about, we're right at the precipice of Treasury yields around this 450 level. If we go higher from here and it's driven by inflation expectations, so if tariffs start to really feed through to expectations that inflation could go higher, the Fed's hands are tied and the Fed does not cut rates this year, that's what our base case is, then I think higher rates could start to be a challenge for credit, and we could see that correlation flip.
I was thinking about this because we're starting to get some very strange soft and hard data. On the one hand, people like Torsten Slok are emailing us charts that say, hey, we're not seeing a rebound when it comes to trade between the U.S. and China despite the pause. On the other hand, we get consumer confidence numbers like we got a little earlier today that show a sharp rebound in the way that consumers are thinking about the economy thanks to that pause from the president. How is this all playing into the macro economy? Because this is kind of uncharted territory for a lot of us.
It's definitely uncharted territory. Our thesis is that some of the soft data will start to feed through into corporate earnings. And we've done a lot of regression work looking back in time when we've seen drops of sentiment, business sentiment, consumer sentiment. 3 to 6 months out, you typically do see CapEx roll over, EBITDA start to roll over into negative growth territory. So I think one interesting data point we got from first quarter, CapEx growth was actually negative year over year for corporates. So even with just the tail end of tariff impact, companies started to spend less, just given the uncertainty in the environment.
I mean, that's a really good point. Like, I feel like we have an increasing, narrative voice that says, watch the second half. Like, these tariff concerns, because we are going to go into, no matter what, a higher tariff environment. Maybe not as onerous as we've heard initially from the Trump administration, but it's going to be higher.
We're there already.
Well, and so,
but I'm not seeing it necessarily play out.
And that's what I'm saying. Like, in the data in the second half of the year, we'll start to see that.
I think exactly to your point. I mean, we'll have tariffs that are roughly 5 times what they were pre-Trump, and that has to have an impact on prices, on demand, and one place we can continue to watch is the lower end consumer. We think that tariffs in combination with some of the fiscal policy that we're seeing, cuts to things like food stamps, you could really see that segment start to struggle even more. But for now, investors are happy to focus on bullish elements. They're happy to focus on deregulation, happy to focus on potential tax cuts, and only that we've seen tariff relief.
It does still seem like, I mean, on the earnings front, and I know we're talking credit here, but I can't help but think we're at the tail end of earnings season. Carol reminds us that we have NVIDIA tomorrow, which is like the moment we've all been waiting for. You can go and pick through different reports and get the impact on tariffs. And some of them you'll see, certainly retail, getting hammered for a lot of reasons. And we can talk a little bit about Target or Walmart, different animals there. But when it comes to big picture, like the tech players basically said, everything is kind of fine for us. It's like a tale of two different types of companies that are weathering this.
It's very much sector dependent, and I think the market has rewarded companies that have talked about their strategies to sort of deglobalize and diversify their supply chain. So I think that you'll see companies during first quarter that just stocked up their inventories and said, this is our strategy for tariffs. We're penalized in the credit market, whereas those that said, we've been thinking about this for a few years. We have done some onshoring. Those types of companies have done much better.
I'm going to do a little Tom Keene. You're a BA in economics from Brown University, MBA from Columbia, CFA chart holder. But I just think about, you have experience in the investment banking world. You're looking at kind of all the markets and how they interplay with one another. And this market in time, is it an interesting one? Is it a pivotal one? Or is it TBD? We're not quite sure yet.
I think it's one of these moments where we're waiting for the data to unfold. Even you hear from companies, we didn't get much in the way of guidance. We heard mostly just tariff math
or options in terms of the way forward
and different scenarios. So I think it definitely to your point is uncharted territory in terms of what we're looking at in the months ahead.
So where do you go in the treasury? Like, what's your favorite kind of
so in credit, we do like mid-quality in the high-yield space, so is single Bs. We think that's a spot that can still outperform. In investment grade, in line with our discussion about the rates curve, we like staying more in the belly of the curve, so 5 to 10 year, kind of avoiding that long end of the curve where you could see spreads move wider if we do see a further sell-off in the treasury market.
All right, cool stuff. Perfect guest. Thank you so much.
Thank you for having me.
We went everywhere.
Well, it's that kind of a day. Yeah. Like, we've kind of felt that in our planning call this morning, right? It was just like stuff coming at us from different areas. NVIDIA still to come. Like, I don't know.
Japan.
Yeah. I don't know.
It's everywhere.
It's an interesting world, and we're living in it.
Megan Robson, head of U.S. credit strategy for BNP Paribas. Coming up next, Tech Talk, courtesy of a big deal in the application software space and another international player spending to grow in the U.S.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing right now. We are very close to session highs. Stocks rallying, consumer confidence rebounding sharply, and the U.S. and the EU are speeding up their trade talks. Right now we have got the S&P 500 index advancing by 2%. The Dow up 1.7%, up 715 points. S&P, by the way, up 115. NASDAQ up 446, up by 2.4%. Russell 2000 index of small cap shares up 2.3%. The Bloomberg Mag 7 index higher now by 3.1%. The 10-year at 4.43%, with the 2-year currently yielding 3.96%. Gold now down 1.3%, $3,300 an ounce even. West Texas Intermediate crude down 1.2%, $60.81 a barrel on WTI. And Bitcoin just above 110,000, up by 0.5%. The big event after the close of trading tomorrow going to be NVIDIA ahead of earnings, up now by 2.9%. Yes, we got you covered on Bloomberg Television and Radio when that number drops. Again, recapping here, the Dow, the S&P, NASDAQ all higher, 2% advance right now for the S&P 500 index. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thanks so much. All right, folks, we're going to talk a little data. We're going to talk a little collab. We're going to talk a little deal flow. First up, a done deal. Salesforce agreeing to buy Informatica for about $8 billion, sealing the deal at a software firm that had seen its shares plunge by as much as 59% since the company's first talks failed last year. And Tim, safe to say, our team was on it and broke it. We were talking about this, late Friday?
Yeah, you actually had to change your gainers on Friday because you added, I believe it was Informatica to that. Salesforce also moved on the news. Leanna Baker is Bloomberg News managing editor of the Deals team. She joins us here in the Bloomberg Business Week studio. As we know, thanks to your reporting over the last year and your team's reporting, this is a deal that Salesforce has been trying to get done for quite a while, kind of taking advantage of a decline in the company's stock price to do it now, no?
Patience has definitely paid off a little bit for Mark Benioff, maybe by $2 billion, because that's what he saved by waiting a little bit.
That's real money.
For sure. Carol mentioned that it's a done deal, but actually it still needs regulatory approval, so nothing is certain in that respect. We'll keep following it. Analysts are saying there's some overlap in what the company, what Informatica does with what Salesforce owns, so that's something to keep an eye on over the next few months.
Is there a real risk there when it comes to this administration's regulatory? I mean, look what's happened with media M&A. For example, I think it was last week or even the week before that Verizon deal was able to close after Verizon scrubbed the DEI stuff from its company. They were able to get Frontier. Is that an issue with a deal such as this? Is it going to get political?
In this environment, it's just so unpredictable. It's hard to say what deals are getting done because they're, so different than traditionally what antitrust authorities have looked at. But we do know there is some overlap, so we, need to take that seriously. I'm not sure what Mark Benioff's relationship is with the administration. These are all big questions.
So they've been working on this for over a year and then some, maybe finally get everybody to say, let's do this, and yet there's still some major obstacles. Or is there?
We can't say at this point. We don't have the reporting, but I have noticed that some research analysts are saying, hey, look at this overlap. Salesforce owns a company called MuleSoft that they bought a couple years ago. It was also a large acquisition for them, and apparently there is some overlap with Informatica. These companies are kind of like in the guts of, data management, and from what I understand, they're kind of the picks and shovels of AI, things that are very important that are happening in the background under the surface that, help with the adoption of AI. So that's why this is important for Salesforce.
I mean, yet the stock, if I look at Informatica, right, it was up, 28% at its highs on Friday, finished the day up about 17%. It's right now up another 6.5%. It's trading at 24 and change. So it's not like investors are hammering it and saying, wait, we don't think this is going to happen.
That's a great point. But it's still trading below the 25 a share.
About $1 or so. Why does Salesforce want to do this?
Right. So I think it's back to what I was saying about the picks and shovels play on AI. Salesforce has rolled out sort of an agent force. It's their AI agent business. And from what I've read, this Informatica product could help power that. And Salesforce is looking for some inorganic growth to help, help the adoption of that, which there's a lot you have to do with the data to clean it up before you roll it out to your customers. So I'm sure there's a strategy behind this, but it is tricky when we're dealing with these companies that are more, B2B in the guts of technology.
Totally.
It's been around a long time, Informatica.
Salesforce is a really acquisitive company. I mean, some of you mentioned MuleSoft, but Slack is one of the companies that it acquired in recent years. It bought Tableau as well. Demandware is another one. I mean, the list goes on and on. What exactly is Salesforce trying to become through buying all of these companies?
Mark Benioff has always loved acquisitions. He had to pump the brakes for a year or two. There was a swarm of activist investors, you might recall, that were saying, hey, wait a second, let's maybe slow down some of these deals. Maybe they didn't all fit together. We also broke in the last fall, Salesforce did something called Owen, or Own Backup, an Israeli company that it bought for $1.9 billion. So they had been doing tuck-in acquisitions, but I'd say this is sort of Benioff's return to the bigger ticket items. Obviously not as big as Slack, as you mentioned, but it's up there, not as big as Tableau, but definitely one of the largest lately. And it seems like the appetite's there and shareholders don't seem to mind it.
Does another company that either competes with Salesforce or Informatica are looking at this saying, we've got to now do anything? Like, I'm just curious about this space. You're talking with your team, in terms of tech and just M&A. Is there anybody who's like, all right, now we got to do something?
So we've reported that Cloud Software Group, which used to be known as Citrix, that they were also interested in Informatica. So we'll be watching them. They're privately held, the result of a take private, but it's a very large company, even though it's private. So I'm curious what they might acquire. The CEO of that company used to be the CFO at Broadcom, and that's just one to watch that could get acquisitive. So that's what I'll be following. In terms of the publicly traded targets, I can't really speculate on what's the next company to buy that's going to be the next Informatica. But it does have private equity ownership, so that's something to look at whenever you see them in your shareholder roster.
What does it do? What does an acquisition or a potential acquisition such as this tell you about the deals landscape right now? And also, what does your reporting tell you about the deals landscape? Because as Carol reminds us all the time, this was supposed to be the year of the deal. And what happened was we saw a lot of M&A put on hold back in March and April over concern with the markets and with tariff uncertainty. Some of that concern has gone away, and we've seen indeed some of those companies that have pulled their IPOs actually come out and have pretty successful IPOs. What about in the M&A space and in the deal space? What do you see?
There's no doubt that it's a great sign that coming off a holiday weekend, you see a Takeover Tuesday, some flashy headline number with an acquirer. So we need more of these deals to help us get closer to that year of the deal that you mentioned. So definitely a good sign, but we do need to see more of these happen.
I mean, is the pipeline pretty heavy? Like, it's funny. I just feel like the last couple of years, whether it's private equity, private credit, like all of these guys are just kind of waiting for stuff to pick up. Is there a lot of stuff in the pipeline waiting for, I don't know, the administration to kind of calm down and that level of uncertainty, to see what the regulatory environment, get an idea of that? Like, what is it?
This deal came at a funny time because it was a Revive deal. It happened a year ago. We also saw Google Wiz, a month or two ago. That was another Revive deal. So it seems like deal makers are dusting off their playbooks and say, hey, let's see what we were looking at a few years ago. Maybe, now's the time to transact. So no deal ever dies, as we say in M&A circles.
That's really funny. Occasionally, right? Occasionally.
But then they come back.
Like this one.
Yeah.
Yeah.
The U.S. Steel, it comes back, right? All these deals, never quite, get buried.
So is there anything in terms of a time, like you said, the one thing, I know I said done deal, but I guess I just kind of based off of a year and, looking at the share price. What do we wait for? If there's going to be some kind of regulatory review or that process, is it the next couple of weeks or what is that?
It could be pretty lengthy, I'd say. Regulatory approval could take a while. So, it could be a slog. We'll see what the companies say. I believe Salesforce has earnings tomorrow, so maybe we'll get a little more color on that.
I want to go back to something that you talked about at the start of our conversation, and that was the fact that it's not necessarily a done deal. And I asked about the politics of this. And we see this happening with M&A and media right now, because the FCC is an organization that in some cases does approve or prohibit companies from actually merging to one another. Is there any indication to you that when it comes to M&A like this, we could also see some political elements get thrown in here?
I mentioned that Benioff's relationship with the White House could come into play, but I don't have the reporting to back that up. It's just something to look into.
I don't remember, Carol, if he was at the inauguration.
I don't think so.
I don't think he was.
Yeah.
And as our reporting will show later.
Just because you're there doesn't mean you're in like Flynn.
Exactly. That's what I was going to say.
Even Elon seems to, well, we'll find out, right? TBD. Leanna, thank you so much. Certainly a story we've been following since you guys broke it on Friday. Leanna Baker, she's Bloomberg News Managing Editor of the Deals team, joining us here in studio. We're going to stay with tech and to another company that's in the application software space and one with a great read on small business.
Yeah, before we get there, let's head on over to Charlie Pellet and get an update on what's happening with the markets. Hey there, Charlie Pellet.
Well, hello there, Tim. Back to work Tuesday on a holiday-shortened trading week. We have got the Dow, the S&P, NASDAQ all ripping higher. Just talking about Salesforce up 1.7%, and also shares of Informatica up by 6.4%. S&P up 116, now up 2%. The Dow up 723 on the Dow. That is a gain of 1.7%. NASDAQ higher by 446, higher now by 2.4%. The 10-year at 4.43%. The 2-year is currently yielding 3.96%. Gold is down $41 the ounce, 33.02, down 1.2%. West Texas Intermediate crude just below $61 a barrel, down 1%. And Bitcoin now higher by 0.5%, 110,173 on Bitcoin. Advanced Micro Devices shares higher after HSBC upgraded the chipmaker to hold from reduce. Advanced Micro Devices shares up now by 4.2%. NVIDIA reports tomorrow after the close, up now by 3%. And briefly, Southwest Airlines shares they're higher after Jefferies upgraded the company to hold from underperform. Southwest up now by 5.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As we said, we're going to stay a little bit with technology, and a company that plays in the cloud and data, really works with small business companies. A great read, in fact. We're talking about the company Xero. It's an $18.1 billion market cap cloud accounting software and small business platform company. Sukhinder Singh Cassidy is the chief executive officer of Xero, which trades outside the United States, is based in Wellington, New Zealand, and she's joining us from San Francisco on this Tuesday. Sukhinder, good to have you here with Tim and myself. Tell us a little bit more about your company, the bulk of your business, where growth comes from, who your customers really are, industry-wide as well as geographically.
Sure. Well, thank you so much for having me on. As you know, Xero is a cloud-based accounting platform, global in nature. We're about $2.1 billion in revenue AUD. We trade on the ASX. But the most important thing is we have, over 4 million customers around the world in key geos like the US, the UK, Australia, New Zealand, and 180 other countries, providing them not just cloud-based accounting software to small businesses and their accountants, but also providing payroll and payment services alongside that. So global footprint, many markets, but certainly the US, the UK, and Australia are our big three.
So given what you do, you have an incredible view on the economy globally, not just based on who your clients are and what they're actually doing with their software, but how your software is actually selling. So given the data points that you understand, the regions in which you operate, how would you characterize the global economy right now?
I'd say the global economy is almost as you all read it, which is, I would say, an economy of mixed signals versus the data. So as you noted, we operate across many geographies, and you would still see relatively strong jobs growth. As an example, you would still see relatively strong sales growth across many markets for our small business customers. And yet, the sentiment in many markets is one of uncertainty. You have small businesses in different markets looking at different tariff pressure that might put pressure on their cost of goods sold or imply price increases for their customers. They're certainly nervous about cash flow in that regard. And then you have some enduring issues for small businesses that are, despite macroeconomic times, which is the enduring problem of cash flow and managing things like late payments. So we see, as I said, relatively mixed signals, but I think we can agree that they feel uncertain in this environment. And of course, we believe our software is there to help them manage their cash flows in that uncertainty.
How much of the uncertainty is a result of what's going on here in the United States?
I think a fair amount. I mean, look, as you all know, small businesses in the U.S., including in the U.S. as an example, small businesses were growing very healthily pre-COVID. 5 to 6 percentage points a year, according to our data. And then what we saw is with COVID, a big disruption. And then, of course, just as they started to recover from COVID, inflationary pressure, 11 interest rate increases. And that's just they were starting to settle from that. And maybe the promise of, let's say, a deregulated environment, well, along comes new uncertainty with, as an example, tariffs. So they are having to navigate a lot in the last 10 years, certainly. But certainly in the last few months, even more.
So, Kendra, one of the things, too, we're curious about, and I know it's something you have been working on, and that is to expand your presence in North America, and it sounds like the U.S. specifically. Walk us through what you have been doing, the investments you've been making, and what kind of growth you are seeing. And I'm also just curious generally about your exposure to the U.S. market.
Yeah, so interestingly, we're probably one of the few, native cloud SaaS businesses of very large scale that is underweight the U.S., meaning the U.S. was a new market for Xero. Obviously, I'm based here in Silicon Valley and have been here for the last 30 years. But for Xero, they entered the U.S. market maybe a decade ago on the promise of bringing cloud-based accounting to the market. It was largely a desktop market. And over the last 10 years, I'd say the company steadily increased its focus and presence in the U.S. and is now seeing a nice acceleration of those efforts in subscriber growth, very strong subscriber growth. We just reported results about a week ago. Very strong revenue growth here in the U.S. And what we see is very, very much a lot of white space. There's still a large number of small businesses that have never digitized their back-end accounting here in the U.S. And obviously, the opportunity to do so saves them time, saves them money, and with AI can offer new insights. So we see a pretty attractive market landscape here that we've been building towards.
How do you do this at scale with a sales force that, is it cold calling? Because when you're calling on these small and medium-sized businesses, some of them are indeed very small, and those could be pretty small accounts. Is it self-service? How do you handle the incoming, or is it outgoing?
Well, in the U.S., we have a multi-channel approach, just as we do everywhere around the world. We have a pretty big direct or self-service motion where small businesses can discover Xero online through ads, through social media. We have large Facebook and LinkedIn engagement, and can come to the website and sign up directly. So we have a big direct funnel. We have a sales force, but that sales force, believe it or not, calls on accountants and bookkeepers, not some small businesses directly, because, of course, many of the small businesses we have work with an accountant or bookkeeper for their taxes and bookkeeping. And then the third thing is we have increasingly new channels and new partnerships working with other vertical SaaS providers, people like the neobanks around the world, where they refer customers into Xero as an SMB is starting their journey in payroll or payments or banking. And so we work across all three channels everywhere in the world pretty successfully.
How are you using AI right now from the perspective not just of with your clients, but also when it comes to sales?
Yeah, so look, I think that like many cloud-based accounting services or cloud-based services, our first goal is to put AI in the hands of our customers. So the full focus is on launching JAX, which we did this past year. JAX is Just Ask Xero. It's our sort of companion, if you think on the site, of their like mini CFO in a box that helps you use Xero. This year, we're very much focused on the expansion of JAX for our customers so it can do more jobs for you on our platform. And of course, that is the promise of AI, which is really give back, first and foremost, time on these tasks, accounting tasks, payment tasks, and then to give you more intelligence, more reasoning, and all the insights our platform has to offer to really expand that offering through AI. That's the first and foremost focus of the company right now.
So Kendra, it's so funny. When earnings season, we go through in the United States and we get to the application software part of the earnings cycle, we're like, oh yeah, there's another one, there's another one, there's another one. It's not companies we talk about all the time, some of the bigger ones.
It's like driving from the San Francisco airport into San Francisco and seeing the billboards.
Yeah, it's exactly.
Yeah.
We do not have a billboard on the 101. I will say that. We're more targeted in our advertising, but I know a lot of tech companies do. Our small businesses are all over North America, so we spend our dollars elsewhere outside of just the tech corridor.
That's what I'm trying to get to, like our audience or the investment audience. Like, what is it that they need to understand about you guys specifically amid a space that has a lot of players?
Sure. So first of all, just to note, Xero is one of the highest growing software SaaS platforms in the world. We just grew 23% year over year. We're profitable. We're Rule of 44. Just because we don't trade on NASDAQ does not mean we don't have a global footprint. We were based and launched from the Australia, New Zealand region, so that's why we trade there. But the most important thing is, we are a strong, growing SaaS player betting on the macro digitization of small business software.
Right.
And the cloud accounting space still has a lot of yield in most markets in the world, including the U.S. So excited to play where we do and excited to serve this many small businesses.
Are you looking to list in the United States? Like as you make investments in the U.S., look to expand your business in the U.S., or you're looking to list in the United States?
Well, right now, we're pretty happy on the ASX. We have shareholders who are very fundamentally oriented and interested in our long-term growth. We do have U.S. shareholders in the share base. If we would ever consider, listing, we'd be thinking about maybe at some point in the future a dual listing, no time frame, no commitments, but really just to widen the ability for all investors to participate easily in the Xero story. But pretty content right now with that ASX listing and a really great shareholder base.
Hey, very briefly, before we let you go, tariffs and the new tariff regime here in the U.S., where the average tariff rate has pretty much increased fivefold over the last year, and that's before deals have been signed with many different trading partners here in the U.S. How is it affecting the small businesses that make up the North American portion of your companies?
Well, I think you have hit the nail on the head. I think what they're trying to forecast is what the cost or disruption is to their supply chain. Let's hope it's not disruption, but rather, the management of a lower tariff scenario. We will wait and see what happens here over the next 90 days. I think they're mostly trying to figure out, hey, what is the implication for their cost of goods sold? What's the implication for availability of supply? And lastly, what's the implication for price rises they may need to entertain in order to be able to hold margin if their cost of good goes up. And again, we really think of our business as trying to help them navigate those changes with increasing insight and foresight.
All right. Really appreciate getting some time with you. Sukhinder, thank you so much. Sukhinder Singh Cassidy, Chief Executive Officer of Xero, joining us from San Francisco on this Tuesday.
Hey, the S&P 500 off its best levels of the day, but still up close to 2%. Carol, the NASDAQ Composite up 2.3%. The Dow higher by 1.75%. NVIDIA tomorrow, that's what everybody's waiting for.
That's because everything is awesome.
Is it?
Or it certainly seems to be. U.S. consumer confidence rebounding sharply in the month of May from a near 5-year low as the outlook for the economy and labor market improved amid a truce on tariffs. And yet, there is still something that keeps Fed officials on guard, as we heard from Federal Reserve Bank of Richmond President Tom Barkin. He spoke with Bloomberg TV and Radio International's economic and policy correspondent Michael McKee earlier today.
Inflation is a big bugaboo. Prospect of inflation drives sentiment down. There's no evidence yet that inflation-driven drop in sentiment drops spending. And nothing I'm seeing in the real-time spending data suggests that spending is dropping. But that's why I say there's the disconnect on the consumer side.
Federal Reserve Bank of Richmond President Tom Barkin earlier today with Bloomberg News international economics and policy correspondent Michael McKee. He joins us here in the Bloomberg Business Week studio. The numbers came in when it comes to consumer confidence pretty strong, at least on a headline basis, but there was some concerns about the labor market in there. How do you explain such a sharp increase over the last month?
It looks a little bit like an outlier. And because it's such a big move, you have to have a little grain of salt or two when you're looking at the numbers. But the Conference Board said that the survey was about half over when President Trump walked back the China tariffs and said we'd have a 90-day pause. And after that, the responses got much more positive. So it looks like there may have been a tariff effect in this, a psychological tariff effect in this. We saw the Conference Board's 1-year ahead inflation figure drop from 7 to 6.5%, still pretty high. But the Conference Board also said that the big increase in the confidence numbers was also driven by Republicans as opposed to Democrats. So whether this is a one-time thing, just a fluke, or whether it represents a real turning point is hard to say. But I think I go back to what Tom Barkin said, and that is that we have to see what consumers do, not just what they say, which we will find out on Friday because we get this personal spending numbers for the month of May.
Was he confident? What was your takeaway in your conversation with him in terms of his outlook here?
He's not confident or I mean, everybody's concerned because we don't know what's going to happen. But basically, what the Fed officials have all told me, including Tom today, is that they're less reliant on the data because data is backward looking, and they're putting a lot of weight on what they're being told by corporations in their districts. Companies have to make decisions about, are we going to go into recession and therefore should I lay off people? Can I raise prices because of tariffs? What's my sales outlook if people cut back? And how long is this going to go on? How long can I live in limbo? And there's no good answers right now, which is why every Fed official is telling you, we don't know what to do or what to say yet, but we're watching.
Yeah. Look, we're not here to talk about with you the equity market and why the equity market is back
That's
to
a good
levels.
thing. I could lose you a lot of money.
But what I will say is it does seem to be that there's at least a confidence on the equity side that we've moved past this. And what we're hearing from Fed officials is that's not the case, that people who make decisions when it comes to spending money are sitting on their hands, they're not spending the money. When do we see that start to appear in some of the data that we look at?
Well, we did see a little bit today in the durables goods orders numbers, capital goods orders, non-defense ex-air, which is the stuff that goes into GDP, fell by 1.3% after rising 0.3 the months before. And that was a significantly worse outcome than anticipated. It suggests that maybe businesses are holding off on spending. We'll see what we get from the consumer spending numbers. Then you've got to have this repeated for a number of months to figure it out. And we got to watch the jobless claims numbers on Thursday to see when companies start thinking maybe we need to change our staffing.
In these numbers that we got earlier today from the conference board, there was a little bit of concern when it comes to the way that people who were surveyed are thinking about the job market. There was a little bit of weakness there.
Well, this survey is very heavily dependent on the jobs questions and what people think the outlook for employment is. And we saw the number of people who think that jobs are easy to get fall, and we saw the number of people who thought that jobs were difficult to find rose. And the same thing was true in the 6-month outlook. So people are starting to have some concerns. They weren't major moves, but they do show that this is still on people's minds. And it probably wouldn't take much to reverse the confidence numbers. Now, what's it going to take to reverse the actual spending? That's the question that nobody can really answer. Interesting story today on the Bloomberg about companies not cutting back their capital spending plans. That's all based on first quarter earnings reports. And it doesn't tell you anything. Trump didn't announce his tariffs until after that was over. So that's something else we're going to be watching, is whether people pull back on their guidance during this quarter and certainly at the end of the quarter when we get the next reports.
Uncertainty. Let's all say it together.
Let's not. I'm tired of that word.
Tired of the word? It's just Mike, it's just transitory, okay? Uncertainty is transitory.
We hope.
I dared one Fed official to not say the word uncertainty in talking about their forecast, and they said, no, I'm going to say uncertainty. It's a drinking game for the audience.
I'm glad to know that they're on the same page with all of us.
Expect alcohol sales to increase then.
Exactly. Mike, thank you so much. Really appreciate it. Bloomberg TV and Radio's international economic and policy correspondent, Michael McGee. When we come back, we're going to get an update on the trading day. We've got a rally underway when it comes to U.S. stocks. We're also going to take a look at some of the specific stocks on the move. You are listening and watching Bloomberg Business Week Daily.